Mm-hmm. 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 Oh, boom, 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 boom. Hey, good morning. Good morning. Guten Morgen. Welcome to the stream today. Where is the price of GME? Hang on a second. Oh, baby. Top of the morning to ya, laddie. So many. Top of the morning. Top of the morning. Hey, good morning, Maize and Blue. Yeah, just moving through life. I'm allowed to do Irish accents, I think. I had a conversation with my wife, and I said, why is it wrong to do, I could not, I don't know. She's like, she's like, this doesn't feel right when you do like, anytime you do like an Asian accent or like, you should not kiss that, by the way. Larceny stone. It's the Blarney stone, isn't it? uh, that was a good joke, though. Larceny stone. Um, bottom of the morning? Top of the morning? Um, you shouldn't kiss that stone. Evidently, a lot of people like pee on it and stuff. Don't do it. If you ever go there. I believe you said 432, got 5 at 430. Oh, yeah. Well, listen, this is a little bit of a dicey situation today. So we're in I wouldn't say a pickle, but a little bit of a pickle. So we're going to have to talk through it quite a bit. I really want to just kind of be a straight shooter as much as I can. And one of the things I did yesterday, since we had an off day, I worked on other stuff, obviously, on my own time. But then I went and I spent about an hour or two looking at the chart. And I wanted to see if the paths are still, we've kind of come and gone, right? Like we've passed all these opportunities to jump creeks early. And we did like a bigger picture analysis, and there was a lot of indication that certain things were going to end around October 4th. So my estimation for this week was fairly accurate so far. It's not been like, it's not perfect. It doesn't have to be perfect. It has to be close enough that we're kind of like in a sense like getting the right ideas. And we just kind of barely made this creek jump. Went really slow and sideways down, and it did jump it. It's just not. Usually there's a little bit more of an oomph to it, and then it ended up just kind of breaking right back below it. So, does that really matter? Not really, because in the end, if this were accumulation and it was going to continue, and I'm not 100% convinced that it is because of how high this came, but if it were to continue here, it would look fairly similar to what I drew, and you'd end up with instead of crossing here, we didn't cross, but you'd still end up with the same reaction where you'd have to jump this creek. So it doesn't really matter. It um, could have been different, yeah, you know. Could have had the jump that was stronger and come back and check it. Doesn't make a huge impact, because at the end of the day, what is needed for confirmation doesn't change, which is just the need to jump this creek and continue on. So, rocks in hard places, yeah. Listen, if we're going to talk about importance, and I say this, often on here, and I don't mean to be like that guy that's like trying to make everything seem like this huge deal. It's not always like a huge deal. But if we're going to talk about importance, some of the stuff we're going to talk about today is probably the most important things that we've talked about in a while, because I had a kind of like a coming to Jesus moment yesterday where I was like, man, I want to make sure that if I'm wrong about the timing of the current setup, and if it doesn't go, which is not impossible, if it doesn't go, I need to have a better, broader understanding of like where this has been going on the bear side and what that's going to look like and why the operator might do that. And I put a lot of notes on the Discord yesterday about it. I think it's hard to read through those notes because I call them cliff notes. It was like a few paragraphs of maybe what price targets might look like. It's hard to look at that and digest it without me being able to explain it, and I didn't really explain it. I just kind of said, here's what I would expect if this, then this, if this, then this. And so we'll kind of walk through that today. Market's red overall, so it's a red day in the market. You've got IWM kind of making that stride. I mean, I really feel like this is probably a better wheelhouse for me to be trading. I've been saying that a lot of the last couple months, and I don't know, the ETFs are just a lot easier to trade. Just seem to be, there's so much money in them, and there's just a lot more consistency overall. I'm not saying you could have easily made money on this. I'm just saying like the price targets have been pretty obvious. So I'm not even at all fazed by this red day on IWM. And I kind of had speculated earlier in the week and last week, maybe even the week before, I don't remember, probably somewhere after FOMC, that we would come back down, and these targets were there. So if you're like, man, this sucks, it's like another red day, another red week. Nah, yes and no. I mean, like when we finished up FOMC, I was very clear that I had a lot of ideas about downside because of the gaps that were left around 212 because of the big creek cross. There was no check. I mean, it's not really not that complicated. So you're just waiting to see if there's some kind of a dramatic break. There never was a re-break of 225. It didn't happen. So there was no confirmation that it was going to continue. And I remained very skeptical that it was going to continue until it didn't continue. So like, why was I that confident? I wouldn't say I wasn't that confident. It's just a matter of like looking at the chart and saying, well, it didn't make adequate checks of any of these kind of moves up. And lately that's been the way it's operated, is that if it didn't make the check, it's going to go back and make the check. And there's time to do it. There's no huge rush here. It's a good opportunity. Let the sellers sell. The small caps deserve their go, but in my opinion, they're ready to go. But there's always going to be that kind of last minute excuse for a sell-off, and I think that FOMC was it. It was a sell the news kind of moment. These are things that you don't want to kind of relegate to these off chances. Like, they're very real, distinct chances. Anytime there's a lack of a creek jump or a lack of a creek test, always, it's a very real chance. So I'm like not really fazed by the red week this week or even last week. It's just exactly what was expected in some ways. Like, it was what was most probable. And I know I've been saying that a lot lately, but that's because that's been the case lately. Like, it's been very expected price action. When we look at something like GME, I think a lot more people are going to be like upset or shocked that this came back down. Like, I'm not, like I was like stressing when it pushed up. Everybody's like getting really excited, and I'm like, you guys got to wait for this confirmation. Breaking a creek or breaking a trend line is not enough. It's not enough. that's not confirmation of strength. Strength is built on those two things. It's built on two things, right? It's built on the ability to break a resistance or a support and then convert it. Like, it has to be converted, right? It can't stay a resistance. So once it breaks, it has to now become a support. It's that simple. So like sometimes we see a stronger push up and then you have more time to come back down and check it. Like we see that here, I drew that out. That didn't happen, right? And I had it specifically back here on, I think Friday we were talking about like, hey man, it's not bad, but it's not going there. You know, the volume looks good on this push up, but it's not looking that great right here. And you always have the chance to come back down and just kind of fall back through. Now, from that point forward, you're looking at where do you think it could go? And 2150 is the level that I picked because of this creek and this uptrend. It's really more of like a wave cross now because it's been acting as support and resistance, not just support. So more of like a fanning kind of trajectory, if you will. And that's what I picked. So whether or not it stays here today into tomorrow, don't know. Maybe it'll push back up to 22. Maybe go back down to 21. Not positive. And frankly, it's kind of irrelevant. What's more important here is whether or not this whole area holds on the big picture. If it doesn't hold, and it's probably not going to happen all today, is what I'm trying to say. If it doesn't hold, then I don't know where else it's going to go except back down to 2050, and then potentially it's going to try for the deep spring. Now, some of you guys are going to be like, whoa, that's like super steep. Well, yeah. But that's because these are super steep moves. Like, these are the drops that we've been having. They've been getting less and less severe. That's a truth. But right now, I think what we're doing is we're pressing up. You got 4 tops. 1, 2, 3, 4. Right? Now, you might be looking at that like, uh-oh. What does that mean? Does that mean it's a 4 top, Booksy? Yeah, kind of. I mean, long time ago, trades used to talk about the magic 4. Like, you'd get 4 hits, and then you'd break on the 5th. Well, that's not really like his thing. Like, that's really a market-wide kind of understanding of generally how a breakout might work. Like, a lot of the patterns that you trade, I like Bukowski a lot, and a lot of the stuff that he talks about is the 3-hit reversal. So he'll talk about like once it hits the 3rd on the bottom, then it usually, if it's going to break upward, it'll approach the top, do the 4th, and then break. And so there's kind of a consistency there in market-wide like approach to understanding how repeated hits on a resistance can, eventually break it. But that also at times is a sign of just a really strong resistance that's not going to break. And so you keep the door open for possibility here. And one of the things that I talked about was it's very possible that this is kind of like a wedging action. And it would come very low if it drops low. And if it needs a spring, it didn't get one back here, it would need to drop back below the floor at 874. So it's a question of liquidity. If you add enough strength here on GME, you probably can deal with this as just a simple backup to test the creek, and then it'll just break. And once it breaks, it would just go, right? And this time it should be a lot stronger, albeit one of the things that, they keep, I'm talking about institutions that are pushing these price action moves. So they keep pushing up the creek a little bit. So once again, it's like the same spot every time. It's always at like 2310. Like, it's aiming for 2310 every time. First time was back here, on this original move from here to here. It's kind of aiming for that 2310 area. Then it pushed up again, aiming for 2310. Then it pushed up again. Now it's aiming for 2310. This is probably going to be a very similar style jump there if it happens. You'd have to kind of press up against this and then break, okay? Now, the theory is, and I've presented a couple already, but the theory is that on IWM, you may get an early move, that you may come down and go ahead and maybe catch this gap and then break out, and perhaps even next week be taking off. And then about a week later, AMC and GME really would take off if it's going to happen. Okay, so when I look at something like GME, I'm kind of like eyeballing those dates, thinking about how, all right, well, if that's the case, it may not really take off till, you know, it may not take off till next, the following week, not next week. So then you're looking at, okay, how does it set up into the 14th? Maybe it's something like this, okay? I don't really want to get too specific on things like that. We'll wait and see if this bottoms out anyways. That's the most important thing. That's the theory, okay? It's a theory. Doesn't have to be true. It's just an idea, all right? Now, one of the things that I talked about on AMC was this idea, again, that even though the 4th was technically like, just like what I'm talking about with GME, was technically like that date where the wave ends, there's a decent chance that it's a delayed action. And so we talked about how it would make more sense to kind of break down and get to a low on Thursday, which is today, and then tomorrow advance maybe back to 450. I gotta say, they're pretty good at doing this kind of stuff, right? The institutional traders, I should say. And one of the things that's going to really bother me this week is that because of this push up over here back on Monday, we now have a lot less chance to break out on Friday. So one of the things I always kind of think about is, like, during these setups, what is the repercussions? What are the consequences of making this? Like, first consequence is it could have come too high, in which case it's trying to distribute low, right? That's always a given. The second consequence is when it pushes up that resistance. So if there's a creek here, it's kind of floating. I use trends often to kind of illustrate it, but it's really a flexible line. And as it made that new high right here, it's kind of raising the creek up a bit, okay? Now, part of the reason I keep the lines is because sometimes it goes right back down through the previous creek, and that's what happened here. It's like that's the distribution right there on Tuesday. It's that little push up, and then it dropped right back down through that previous creek. You know it's going to sell down, basically, at that point. And it hit the targets that it was expected to hit in this, right? The wave cross and the build out. Everything so far looks good. All right. So far, so good, as you would say. But all of that being said, there's another thing here, and I was just mentioning it when that creek raises, that now in order for you to really advance with some strength, you're going to have to jump that outermost creek. And it could even push up again and again and again and again. This happens every time. It's nothing new. It's not unusual. It's not, oh no, this time's bad or something like that. No. Like every time we enter a bottom and we create a bottom, you're going to be doing that motion. And most of Wyckoff, when you look at that schematic, most of those ups and downs on Wyckoff are actually just jumping long, extended kind of creek expansions from the top of whatever the move was. And it makes sense because it's a sine wave, so you'd have like a fan that kind of, points towards that bottom, right, the low point of the wave, and spreads out. I think that's sensible, and it's the same thing every time. But for us, looking at this week, you can see why that might be an issue. If you're trying to get to max pain at 450, there's almost no need at all to try to advance this creek. Like, it's way above. It's at 460. So, maybe there's a chance that this ends up on top of 450. I suppose that would be the best case scenario, is that it ends up above it. So you get an early rise here, maybe even today into tomorrow, and it pushes up. If it advances again, man, it could be positive. See that advancement of the creek again, perhaps pushing up to like almost 460 again, laying on top of 450. That could be a little bit of a positive setup, more positive than the alternative, which is to wait until the last minute. This is often what happens, is that we get like a gap fill here, for example. We come back down, And then the creek breaks tomorrow, basically like first thing, and most of the day is up, but then you just kind of like, essentially you're just kind of like pumping into the end of the day. And I mean, frankly, this kind of nonsense happens like all the time, and I don't like it. You know, it's not always a head fake, but it's just not reliable. There's no, again, you got the break here of this lower trend. There's no support built, and then it's super easy to rug pull it, and this whole thing becomes like a massive distribution if it's an LSPY. So you said you were going to talk about important things, Booksy. I know, but we got to do like a general recap first. So, talked a little bit about IWM, talked about AMC, talked about GME. Not everybody's favorite, but definitely one of my favorites. MPW, just talking about coming down to that price, and it finally got there. Man, it looks really close to what I drew, which is great. It's always a nice feeling when you're not completely and totally off. Like, hey, it's a good feeling. Yay, pat yourself on the back. It means you're paying attention, I guess, and that's a good thing. I mean, it was really pretty easy, this one, because there's an intersection of a support level here, a rising trend, and then this falling trend that they created on the bear side. So the bears were like aiming for that direction-wise. Okay. I think it's basically as far as it needs to go, but perhaps could come down even as low as 527. The contracts that I was buying into, and I'm not going to spend a whole lot of time on this one right now. The contracts that I was buying into are really, really cheap again. They went down to like 7 cents or something. They're up to like 15 cents or something, and they're cut in half again. It's a highly volatile options chain. Yeah. So I don't think a whole lot of shorts have covered. I was talking about that earlier, like days to cover was like 17 days. I don't think a lot of shorts have covered here at all. I think they're kind of waiting for this other move. I think that's what's happening. And I think if we get that breakout, we're going to see a big pop. If it can hold this creek and advance. If it can't hold the creek, it's a completely different story. We're going to have to come back and look at it. The creek right now is about 530 on MPW. Okay. And then last one that we'll probably look at, I was looking at Charge Point yesterday. I actually think Charge Point's fine. I think it's doing a range down here, which is fine. So it's like a spring or LPS mode. I don't want to like pump up Charge Point because I know that this has been a disappointment for some folks, and it is for me too. I'm shares only on it. But this to me looks like a potential Y coffee and bottom. Like it's an auto reaction bottom, potential phase B top, phase B bottom. So you're just waiting to see if it's going to do a spring action or an LPS here. And if it can jump this creek, it's done, I think. If it can't jump the creek, or if it tries to and then fails, it's probably going to get a spring. I don't know how long that would take. It could happen a lot faster than that. I genuinely think if this is what I think it is, and it looks like it to me, I genuinely believe that this would then go back to the top of the range. And it left a lot of gaps coming down. So there's a strong chance here that you're going to get a really huge swing on Charge Point. It may depend largely on elections. So this is one that we've talked about. It's just a very like politically fueled, because it's an EV supplier. It's a very politically fueled one in an election year. So I don't hate it. I really don't. Still think it's a good trade. I think it's going to go back up to $3 or $4. So I still think it's a good trade, but got to be realistic when it's doing crazy stuff and not holding creeks, and that's what happened when it fell out. It just didn't hold up, so went back down. You didn't get the early cross, you got the drop. We talk about that, right? The M cross that turns into an S curve versus the one that drops. I know this is nobody's real favorite stock. I think there's a wedge here. I hate kind of doing this kind of stuff because I feel like it's a little bit sketchy. When you have like a really loose wedge, it's not always the best. I think there's a wedge breakout here, and I did a target breakdown for it, and I don't know if I shared this, but I think, right? And this would obviously affect it. I think it's just trying to get back up. It looks the same, right? It looks like what I already had on the chart. I think it's trying to get back up to 57 cents. Until this gets above 50 cents, and maybe again, this 57 cents is going to be a good one to look at right here. Potentially, I know I've got it like today, but who knows? Until this gets back above 50, I don't really want to spend too much time on it because I don't think it's the greatest of trades unless you're just trying to catch the bottom. I think that you're really looking for that build out here with support before it's got good confirmation. So everything's kind of pushing back up now after that dip. So the market went red, pushing back up. Let me check. AMC's not really moving, which is it's fine. It's not a big deal. And then I'm going to do what I promised, which is I'm going to talk about that chart that I posted yesterday and those details that I posted yesterday. The market's only been open for like less than an hour. So I did my recap. That's done. Right now it just looks like a wick back up to the support here. You see that? It's just going back and testing the resistance. This is auto reaction maybe. Like maybe. Yeah, on the big picture, I guess I would say this would need to be a spring moment from the bottom here, 2151 or 2154. So, yeah, we'll just wait. I'm not going to hold my breath. I'm just going to wait it out. Every time these kind of make these motions, it's always like, you know, this action to me still looks fairly distributive, and in order for us to get a real breakout, we got to come really high. So go all the way back to the top, and that's a lot to ask for. Otherwise, you would expect there to be more down and maybe a change of character. And there's a liquidity gap here from like 2050 up to 2150. So we'll see. Okay. Let's talk about AMC. Clove doing really well. Well, good. I hope you guys are in it if you wanted to be in it. Enjoy it. Yeah, let's talk about this setup that it's going to take a minute to get through it. I hope you guys are able to stick with me on it. I think it's really important. I'll give you the overall picture if you want to screenshot it, but it's not going to necessarily make any sense. Every time I do stuff like this, it always looks like people call it like a spider web or something crazy. It's crazy until you see what I did, and then it's usually like, oh, okay, I get where you're coming from now. There's in every given turn, like potential turn in the market, right, there's going to be a series of parallels up, parallels down, period. Like, you're always going to have a downtrend that the market's trying to follow if you're going down, for example, and you're trying to turn up, or an uptrend if you're going up and you're trying to turn down. And then you're going to have at the top or the bottom, when the wave starts turning, you're going to have new trajectories being built. They have to build out a long-term trajectory plan if you're going to turn around. Usually it's fairly equivalent to what happened on the downside, so it's usually about mirrored. It's not always perfect in terms of the trajectories. So there's a competition always when you hit a bottom of upward parallels and downward parallels. Okay? All right. So that's fact number one. But then you have another problem, which is that oftentimes you're nested meaning like you're inside of, right, a larger picture. And so in our case, we've got yeah, we've got the downtrend that started at the top in January, or excuse me, in June of 2021. That's the truth. And we haven't broken out of that trend by a long shot. We haven't. But you also have a very macro picture that's got other trends going on. And there's some things that I really wanted to focus on yesterday. And this is going to look a lot cleaner to you. And it was really this bottom here. So for a while, I've kind of speculated that we are in a similar large bottoming period right now on AMC, and that it's not quite what everybody expects, or at least what a lot of the kind of permabull community expects. So there's been an expectation that we're doing some kind of, because of the massive influx of volume, right? That we're doing something like this and we're going to push back out to the upside and we're going to make some new high. But the truth is that proportionally speaking, even if you thought that was the case, based only on proportion alone, you wouldn't expect the next move to necessarily even break the outer creek. And I've already kind of illustrated that on a number of occasions, but like the proportions of these moves is very different than what happened back in January and June. And then I've also made an argument many times that really what this is just a giant creek cross. It's just an M cross that's, moving to the upside. And in a lot of ways, it's no different than any other M cross. It's a S curve. And we talk about this every single day on here. The S curve is the same as the non-S curve, really, in terms of like a broader understanding of like what's going on with that waveform pattern. It's just whether or not it breaks the creek. If it does break the creek, it turns into an S curve. If it doesn't, it usually looks like that M top, and it goes back low to try to grab liquidity. So there's been a lot of folks that have put stuff on their chart where they say, oh, it's going to break out and just go up to like, and this is not majority anymore, but it was for a while. People were like, oh, it's going to break out and go to like the 20s, and then it's going to do this and just like kind of keep going back up. Well, I don't think it's necessarily impossible to have that kind of an event happen. And I think a lot of people are looking at volume and they're saying, well, why not? I mean, it's this huge, huge multi-billion-dollar kind of thing going on here. And like, you could have this massive, yeah, sure. I've been on the opinion that the operator has other plans in mind, and that really what we're trying to do is create a second top here before coming back down again. There's a couple reasons for that. Number one being the gap at 3. But Booksy, that if there's going to be a breakaway gap, that's got to be it, right? Like, yes, you're right. If there ever was to be a breakaway gap in this market, in this chart, this would have to be the only time I could say it could be very possible that you don't ever come back down that low again. Because, frankly, coming down back to that spot after making that like bajillion-dollar move or whatever doesn't seem 100% necessary. It feels like maybe that's not in the plan here, And I feel that that's a valid point, all right? But when it came down, when it first started coming back down, right, and it was a massive drop, it's a huge retracement. All of the targets were still pointing low. So there was a large amount of bear targets in this first half of this setup, first couple months when we first came down. Starting in May, we immediately started seeing potential bears set up for coming back down to 3. And we talked about it, and we talked about it, and we talked about it. It's never gone away, right? And I've kind of stressed that at different times, and then at other times we just don't talk about it. But it's always been there. Like the $3 target's always been there. Okay. So in theory, if I think that this is what's going to happen, right, how would I prove that? Well, you can't really prove it beyond just an understanding of the market and just the way that AMC's been trading. And I've been using this as like one of my bigger examples of like how in reality, like there's always going to be there's always going to be a chance that this is kind of your setup because this is the way that AMC has liked to bottom, and it's very similar to like a Wyckofian bottom setup. And then this would be the M cross that does or doesn't happen, right? It could push up higher and form like a phase B top. You could have that happen earlier, and this could be really just an upward move before the downward move. This could be more distributive, like a cat ear and come low. If it doesn't jump the wave, which we know is like right around here, then it almost always comes back down and goes back towards the floor, which is sensible. And again, all of this stuff seems kind of disconnected, but if you caught the stream a couple days ago, we talked about how it's really none of it's any different. It's all the same. And it's people like to make it this like magic formula that has some kind of like special, knowledge in order to understand the algorithm. I don't buy into that garbage. I don't think it's a special formula that only certain people are able to understand. I think that's a big poopy pants kind of mentality. I think that there's people that may have an easier time seeing the pattern, but that on the whole, like if you can understand the nature of like waveform breakouts and understand the nature of S curves and like where to look for those, you've pretty much got a handle on it. Okay, why am I doing this right now instead of just talking about what I said I was going to talk about? Again, this is just the very, very, very minimum that you need to kind of understand here to understand like what I'm talking about, okay? So if you don't get this, it's not going to make any sense. All right, moving on. Let's make this as quick as possible, okay? So one of the things I've been talking about for a little while is that maybe we're going to just make a phase B top and then come back down, and that's when we get to that gap fill. And there's some unique similarities to the setup in the 2020 range, not just timing, although that is interesting because this is right around the elections, a 4-year cycle. Not only that, but there's a lot of similarities in the way this bottom right here set up. At first glance, it doesn't look like it. When you really take a look at this picture, and again, this is kind of devolving into some kind of like weird fractal nonsense that I know a lot of people are like, I don't really want to see that. But in some ways, like this is very, very similar. This is the bottom that we have right now, and this is the bottom we had back in 2021, or 2020, excuse me. And they're very similar, okay? And one of the biggest similarities is that there's a breakaway gap that occurred and a pretty massive volume increase. I think that we kind of ignore this early part quite a bit. I think the overall picture has always been like, let's look at January, let's not look at the early build out. But you notice like back here, there's a massive influx of volume at multiple times early on in this range when this first dips down. And this goes back to this concept that like, was AMC and GME, was it really not planned to take this back up? Well, look, all I can tell you is that in retrospect, when I look at this, all I can see is a basic Wyckoff build out for an accumulation. So I don't really know that AMC wasn't already building out to have a breakout moment, that this wasn't already like a fake out to the downside. And that argument goes on and on and on. But I want to just point out early on here that move in this pocket region right here, right, has a huge influx of volume. And it's essentially a breakaway from this original gap right here, okay? Why am I pointing that out first? Because that's the same thing that happened to us locally. And then we push up high, and then what happens is we came back down and we built out along essentially like the top of this range back here, but also that LSPY moment right here. So there's kind of multiple points of interest right there that you could argue like, well, that's really where it was coming back to. There's a retracement element of nearly 50%, so on and so forth, okay? There's all kinds of stuff. I'm not trying to make it necessarily like perfect. I don't care if it's not perfect. I'm looking at the principles as they apply to themselves in their own range. So here you have a similar jump over the creek with a massive influx of volume. You have a pullback to what presumably could be thought of as a floor, and it's established back here in this kind of LSPY, last point of supply before another drop here, is essentially like a bear flag moment on the overall chart. This little range builds out as a distribution and then drops, but ultimately they had established a floor around maybe 425 at lowest, and then that's essentially like the center mark, right? And then you would say, well, what about this drop right here? Well, again, it's like when you look at a range, like this would be seen as maybe an early sign of weakness followed by a distributive action, not the floor. The floor probably at lowest could be maybe argued as like 405. I think 425 is the best I can do. And then we've talked about 485 and other stuff like that quite a bit, okay? So essentially we've come back down, we're like resting on that floor. And again, for the longest time, I've been kind of talking about how like I think it's between the two ears, essentially. Okay. So what I decided to do yesterday was, with that understanding and the understanding that we could have broken out, but we didn't, kind of get a picture of like what exactly happened here. You know, when we see that breakout, how exactly did it break out, and why did we not accomplish the same thing? Right, recently. So I went in and I did a very simple measurement, okay? It looks complicated, it's not complicated, all right? So what I did is I measured from the bottom to the gap up value. This is not complex, it's the closing value on the day before the gap. So like when it gapped up, it left a closing value behind. I use that as the trend and it points towards the future top. It all acts as a creek. It acts as a waveform. You can see it very easily, like visually here in this drop, and then the recheck, okay? So it's acting as a trajectory resistance. Okay, then I took that and I mirrored it from the next top, so from the previous top, it's the first top. So I took top one, top two, mirrored the trajectory down, and that's gonna give me a basic analysis of what we would call a wave, right? Wave up, wave down, then break back up, okay? If you have any doubt about this as, again, a setup that is obeying the principles of the market, people say that this was uncontrolled and all this crap, I beg to differ. So there is zero chance, there's a snowball chance in HE double hockey sticks that this was not intentionally pulled at this particular moment when the buy button was removed. We've gone through this a number of times. It doesn't matter how you slice it. That level is clearly very important because normally if you were to break that, you would do a double up. You would have gone, frankly, this is just typical. You would have gone almost twice that amount. You would have gone up to like way up here, a 10,000% move or something like that. Because this is the way that it typically works with these quote unquote algorithmic trades, is that if you can get over that intersection on the cat ear, you're going to have a good chance that you're going to get a doubled up move. It happens, again, in retrospect, you can find it all over the place, all right? So when I'm looking at this waveform, I'm looking at that and I'm thinking, okay, so basically this top is just the topping action of that wave, and then you've got essentially like a mirrored bottoming action of the next wave, right? And you can flip the chart upside down and you can see that same exact kind of motion here. When you look at this direction, again, it's like really obvious when you know what to look for, because you're like, oh yeah, there it is. It's like jump down and then jump back up. It's essentially the exact same motion on the downside. It's just inverted. Okay? All right. Again, need to understand kind of basic wave principle. And then looking at that overall picture that we talked about, you might say that this is kind of that big move followed by like the second cat ear, and then it comes back down to try to reach that low. And we were talking about that a minute ago as well. And you're waiting for that jump of the creek. And again, same deal. Look at where these creeks are established and then where they hold. You know, we hear it all the time. I'm not sitting here trying to like start an argument. We hear it all the time. You can't do TA on AMC. Yeah, that's a bunch of BS. I don't know where that comes from. I think that it comes from a lack of understanding of what to look for, and also just an overall this laziness to not want to do it. It's easier just to say it's manipulated and it doesn't make any sense. Yeah, it's manipulated all right, and this is how it's manipulated, you know, in a very logical pattern. Same deal, okay? So when I go back, I showed you guys that diagram. I don't know if I deleted it or whatever. Probably deleted it. Yeah, did. That's essentially the same exact thing we're looking at right now. Now, it doesn't always build out this way, but oftentimes it does. Okay? Long-winded, but I'm getting there, so just bear with me. So all I did was I went through and I just set up some parameters. I'm not looking for one-to-one action here. If you're looking for one-to-one action, you're trying to do a fractal analysis that doesn't exist. If you're trying to say, like, where are the ups and downs? Where are the ups and downs? Again, you're kind of doing an analysis that doesn't really exist. Like, yes, the ups and downs may be very similar. There may be a patterning that's there, but ultimately the reason for that patterning, the reason is not because you have a perfect understanding of the way that the algorithm is supposed to move. The reason is because of the setup. The reason is because of this established trend right here. If you don't understand that, then the ups and downs have zero bearing. They mean nothing. It's like a vine without a trellis. It makes no sense. It doesn't matter what you understand about A, B, C, D, E, F, G. I don't care. Like, it doesn't matter. And that's where that special knowledge nonsense falls flat for me, because I'm like, no. And this is also part of the reason why a lot of times we'll look at this and we'll get it completely wrong. So we think it has to do this or it has to do that. It doesn't have to do anything. If the setup demands it, if the setup suggests it, then yes. If the setup doesn't demand it and it doesn't suggest it, then no, it doesn't have to do that. And the fractal analysis is going to be busted. So what I'm looking for here is an understanding of that major waveform. I think I got a pretty good understanding of this wave right here, just doing some simple mathematics. It's just basic stuff. Up, down, where's the cross happening here, here, and here, and here. That's it, okay? I took the same principles and I applied them to the current range that we're in to see if they fit and to see if there's anything like this even remotely established. And this is where we're going to come down to the little cluster cuss area that I've got right here, okay? And this is very interesting to me because I did the same thing. It's this strong blue line that's going upward across the chart. It's my main diagonal here. This is built from the bottom to the gap value. Notice it looks a little different. It almost looks like just the bottom trend. It is. It ignores the wick that's on the very bottom here, but that's basically where it is. Like, it's right there, you know? It's essentially right on the bottom because it closed low. That's the closing value, and then there's the big gap up. So then you have that influx of volume. That's the main uptrend, weird as it may be. What that would indicate, if we're looking at a comparison, again, and I'm doing this on the same screen, it's a bit annoying, I know, but if we were doing a comparison, we would say that essentially what that would indicate is that your main price action line. Like, if you're going to have any continuation, that's where it would be. This is not BS. This is not hard to interpret, guys. Like, this is very simple. Like, there was an established, right here, during this wave up, wave down, there's an established support resistance here that's met multiple times. It's creating a trajectory to the upside. When we broke out January and June, that's where we go. And we're meeting other things, it's triangulating, right? Other things as well. Like, that's all there is to it. So it existed, it was there, that's what was used on the way up. You also have a series of other parallels that are being built, and they're essentially being built off of, at first you could argue that they're being built off these two tops, because I went back, and they're very light on my screen, you can see them rising this direction. I thought this was pretty interesting, so I kept it on the chart. I'm kind of clicking through them right now. But if you go through the two tops, one is June 2020, the other is September 2020. Okay? If you use those parallels and you establish them on the bottoms and in the middle of the range, they follow through here really well in the midst of 2020 as intersections. So much like this kind of rise created crosses, there's another rise that's going on here. It's being established, another trend that's being established. And it's not the steepest trend. It's like a secondary one, and it's heading this way. Well, fast forward to where we finally broke down, right? That's the same trend. Like it's still there. When was this trend established? This trend was established in 2020 on these two tops. So the angle of the ascent, in some ways, is defined by two things. On the one hand, the wave, the steepest part of the wave, is definitely defined by this interaction on this cross trend going up through this wave, this main trajectory upward. But there's another one, which is a much more mild trend, and ultimately we're checking it and rechecking it all the way down through March 2023 until we finally break down, and then we go to the secondary one here, and that's where we have the gap down at $40, and then go over to the last one here, and guess what? That's where we have the next gap down when the reverse split happens. Is that a coincidence? No. Not a thing. Okay? It's not coincidence that those are what was used, because that's what was established on the chart. The build out, they're using what they already have as established supports and resistances, established trends to help build out the chart. Every time they've checked it, rechecked it, it's just more and more established as a trend or a trajectory or whatever you want to call it, more and more and more, okay? I'm going to use these same parallels down bottom, and it's going to kind of throw some salt into some into some of this, because I decided to take that same parallel and use it down here and see if that's what was being used. Really, really close to what's being used down here as the main parallel. It's established pretty well in September 2023, December 2023. It's also established here August to November 2023, and this check and then this double check, this check and then this double check. You can take this same parallel, and I know it's kind of hard to see it on my chart. You can move it down to where we currently are, and it's also being used. Okay, so if you want to take some time and play around with that on your own, like, feel free to do that. Go just take a simple parallel from the top, those two tops that occurred in the 2020 range. They apply all over the place on the chart. It's being used as kind of a simple way of understanding, like, kind of the upward long-term slope trajectory maybe of some of these waveform patterns, okay? So I'm using that in part. Another thing I'm using is this downward trajectory. This is not anything new. I've used this one before a couple different places. But one of the things I thought was really, really fascinating, it's probably one of the most interesting things in some ways on this chart. And I think it's so interesting that I'm gonna actually hide all this really quick, and we're gonna look at this just by itself. And I want you guys to take a look at this. I'm gonna bring all this other stuff back because I'm not done. I'm not done yet, but gotta be careful here, because I think you gotta be really careful not to accidentally. This particular parallel, okay, is probably one of the most interesting parallels that exists on AMC right now. Now, you can see almost visually, you can see the importance of it without even words, right? Just like this trajectory here, again, just to kind of re-illustrate this point, just like this trajectory here, this wave cross represents kind of a movement to the upside. You see that? We just talked about this a second ago. Just like that represents a movement to the upside, the same thing happened in this original build out here. And there's an M cross that goes essentially distributive, right? It's a wave up, down, up, down. And when it hits the down again, it tries to hold this. It doesn't hold it. I mean, it holds it, but it ends up kind of breaking down anyways. And there's all kinds of interesting stuff that goes on, you know, on this bottom. Like, obviously we're coming back up to check this bottom here and so on and so forth. It's like a big hook. Okay. Well, what's fascinating to me is in terms of like sine waves, that's kind of all there is to it. Like, it's establishing that downward trend. You could see that downward trend is heading this direction. Ultimately, maybe we thought it was pointing towards, as a TA person, you'd be saying, well, maybe it's pointing towards the 2020 bottom and that's it. Well, what's fascinating is that when you look fast forward again from 2015, where this is kind of established as like the main trend down. You look at 2020, and you can see that the build out on this particular wave is actually pushing off from that same trend again. And it's in a lot of ways anchoring itself on it. I didn't do it a complete service here, but if you take this and you just kind of establish, let's say, 3 parallels around it that are kind of equal parts, you really can see the impact that this has on the future of the price action on AMC. And again, like as a way of understanding wave schematics and just knowing what a middle line does to a sine wave, this is a really powerful middle line. I mean, it's super, super strong. You can see the impact that it has, right, down to the very like way that this whole range is built out around it in 2020. And I think it's really fascinating for that reason. I mean, all the interactions here are happening around that kind of mid-zone. Okay. So I'm looking at this and I'm thinking, well, maybe that's really important now, and it certainly is. And you can go fast forward to where we are now. Is it still obeying the same rules, even though we had this reverse split, so on and so forth? Here you go. So I want you to take a strong look at this overall trend. Strong look at what's happening here, okay? 2015, all the way through 2017. This is established as the predominant wave down trend, okay? This is the anchor in a lot of ways for all of the price action. Yes, I could have drawn this lower, and you would see that that's really darn close to what happened here as well. And it really was established in 2014, which is also kind of bonkers to me to think that that was established at the very beginning of the stock and it's being used. So in 2014, you might say, did somebody know in 2014, when basically right after this hit the market, that this was going to go down the toilet? Maybe. I think they may have already known, because in some ways, what was going on with AMC at the time was their investment strategy. Someone probably looked at that and said it could potentially be very bad for them. You know, absolutely. I would argue that the operators that be, maybe your Vanguard and BlackRocks, probably had invested in this since the beginning, and kind of moved through this. It's the largest theater chain in the world, so it would make sense that it would garner the attention of some of the bigger institutions that trade. But I mean, you can see it established right here in 2014. That ends up being essentially like the 2 bottoms that we currently have, right? So then what would you interpret this as, Booksy, this initial drop through here? I think it's as simple as what happened back here in January going into March of 2020. Yes, that was COVID. This isn't COVID, right? But I think it's really that simple in some ways. You have the same exact setup. You got a hook here that kind of, establishes where the top of the range is. You've got a drop through the range right here and a reaction back up to it, and then a breakout through it, and then you're kind of resting on the top. All right, so that motion in total, here, let me do it again. That motion in total looks like this, without including like kind of the last part. The motion in total right here, I don't really need it to be perfect. It doesn't have to be perfect. It doesn't matter. The motion in total right here is essentially identical. I mean, it's essentially the exact same thing. And both of these are wrapping around the exact same trend. Like they are. So there's almost no difference between what's being established in January to March of 2020 versus what's being established now as the norm, including, but not limited to, including what we're currently doing, which is after this initial push up in June of 2020, coming back down and trying to find a bottom support here, right? And this is where things maybe get a little bit different, because now you have to look at the big picture and say, well, there's some clear differences here. that you can't ignore. One is, of course, that this actually came all the way back down, not a liquid middle per se, but kind of a range middle, like a 50% middle. It also went back down to the previous top. So this just so happens to build out really cleanly along kind of a straight sideways movement, right? And it essentially builds off that previous top. We don't really have that same luxury here unless we consider all of this, all of this, that kind of stuff, which, I mean, you can make that argument. We just did it here, that perhaps, and this is what I was thinking originally, perhaps this is the top that is trying to build off of, right? It's the 485 level. I mean, it is what it is. It certainly seems possible that that's the case. But there's another possibility, which is maybe a little less fortunate, which is this 350 mark. And this is where things become kind of like dicey, right? Because I'm looking at this like, all right, I've got this trend established up. I've got a trend established down. I can find that same trend established up here on the current time frame. I can find that same trend established down. I'm noticing that there's some really strong similarities in terms of where this is anchoring itself on this low, right? So that potentially, and you're kind of going to hopefully see what I'm seeing in a minute, that potentially what you could have in theory is you could have some kind of a massive move to the upside. It wouldn't be what people think it's going to be necessarily. It wouldn't be like a move that goes straight up into Never Land, immediately. This would be slow. It would probably take till late 2025, period. And it wouldn't necessarily go that high. It would only go up to maybe at most like $80. Why does that make sense to me though? Because it's pretty darn close to, if you look back at that intersection, it's not perfect, doesn't have to be perfect. It's pretty darn close to that like 50% mark. And it ultimately kind of goes back to the beginning of the stock. And I've said this before on this channel, I'll say it again. I really think the goal here may not be to break to all-time highs. It may be to go back and retest this kind of original support level. I mean, it's kind of the anchoring level. If the stock is going to ever correct, it'd have to come back here at some point in the future and then check this kind of original level. If it ever turned around, it would have to come back there. But that would be a great place to start, right? And that's about as high as I could see it going for that reason, because there's not really any other demand here just yet. So you're starting to see what I see, hopefully. Now, I've already talked about this a million times. I know that people that follow this channel are probably sick to death. I'm sick of it. So I know you guys are sick of it. You're probably sick of me showing you this. This is the motif, in my opinion, on the big picture as well. I genuinely think that this is exactly what we're experiencing on like the macro chart. And then you can take that and you can interpret, I'm making a little mini version of it, but it's essentially exactly the same, right? You can interpret how this thing has moved over time based on, how this interacted with, the middle and all this other stuff. It's essentially just a giant cat ear, like 1, 2, and then there's the ear 1, ear 2. Ear 2 is like huge. It's this gigantic flat, period right here. And then long term, you would be expecting this to eventually break out if it were to go back up. But it would take time. Like you'd have to establish a bottom here presently. Usually it's like an intersection of 3 things. It's an intersection of like 3 different levels. You might get this kind of a push first, and then you're going to get a bigger jump later. This is your bigger M cross, right? And we see this over and over and over again as a motif on AMC. Again, to get that wave cross and to really move back above, it's essentially just a Wyckofian bottom if it works. It could be distributive, yeah. This is kind of the model that I use when I look back at what happened in 2022, because it's a very similar setup. It's almost identical right here on the micro. It's not really micro, it's more midterm. It took about a year. But it's essentially like the same exact setup, except it never breaks up. It goes up high here and distributes. And so it gets back to this like previous top zone, right here, and it doesn't ever break out. And then it goes back down again, and so on and so forth. The rest of it's history, right? And I've done this like multiple times, and I've talked about how there's just a kind of moment of truth when you get to the top here, and it's a hard thing to determine unless you have a good grasp on the range. But this is where it could go up, break out, start back up, change direction, or it can continue down, and that really solidifies usually a distributive pattern. And then unfortunately at that point, what you're left with is coming back down to that low. And again, I don't really want to get into this too much, but this is essentially what happens back here on the wave jump up, and then it comes back down, right? And this, I think this line actually continued pretty much indefinitely all the way to the bottom here. Okay, so when the wave fails to break, it goes back and returns back to the last known support and or resistance. It turns back to that cross, and we're seeing it over and over again on different scalings, different time frames. All right, so talking about this as a potential bottom that matches or is very similar to this as a potential bottom makes perfect sense. What people fail to remember is that this took like 10 months. It was not a very fast period of time. It took a really long time. All right, and arguably, you could say like, well, maybe we've already established this. You know, it's already been almost a year since we hit this bottom, right? Well, 10 months really starts here on the actual bottom. So if you were to look at that and try to do the same comparison, you'd be talking about this taking a really long time, potentially. Probably it's more like summer, and I've said this on previous streams too, because we found that it looked like it would go back down into summer and then potentially break out again of next year. That's a long time. Okay. So I had it in my mind that we might experience something like this, push up, come back down, push up again, maybe not come that high, but push up again a little bit, and then come back down and maybe fill that gap, maybe bounce out. It would look pretty similar, right, on the big picture, and then that would be that, right? But we have to then take into consideration everything else that's going on in the current time frame. If we're going to make a good estimation of how this could bottom out, you have to then look at the bigger picture and say, well, you know, essentially like, yeah, this is a good layout, but how does it actually play out? You can't just drop some lines and say it's going to follow this, 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 or this. Like, that's not really the way it works. No, it's not. Now, that's the simplest way of understanding this, and if you don't want to go through the rest of it and get the kind of more detailed nitty-gritty, you could kind of leave it at that. I took a screenshot of it. I'll share it in the Discord group, but like, that's really the most simple way of understanding this. It's like, it's kind of anchoring itself on a previous bottom on the low of the trends. If it can break out and it jumps those creeks and all that jazz, it should have a good chance of advancing. Where are those creeks at? You know, part of me thinks that there's a curve here that's kind of coming down, and they're pretty low, but there's also just some really easy to establish downtrends. They're really high up, guys. They're not they're not like right here, you know. And there's a lot of people that keep saying like $20 and stuff. That's okay. It's not like it couldn't happen. It would be pushing that creek though. So there has to be an understanding of that, like, yeah, it's possible, but there's also like a number of jumps that haven't been made yet, that just haven't yet. And most of the time, this bottom, when we're talking about the bottom of the wave, is establishing across these creeks. It's not just going straight up through them. And again, in 2020, it's not even like, it's weird because they actually go down away from all of those and then go sideways for a really long time. And then they approach them again here. If you look at a lot of those outstanding creeks, they're not even really touched almost at all until the breakout. There's very like few of them that are really messed with. And they're essentially just kind of camping underneath them until the very end. And then they kind of push out, you know. So there is some advancement, but only in certain key points, okay? So when I look at this big picture, I'm kind of like, all right, nothing here is new. There's nothing new under the sun, right? Like, I've been through this before. So what are you trying to get at? I think I wanted to check if, and this is what I spent time doing yesterday, So that's the big picture set up here. I spent time yesterday is really looking at the nitty-gritty comparison. So I'm going to walk us through that, and it's going to be a little bit uncomfortable. I'm going to do my best to kind of walk us through that. So I took all the information that I thought was relevant with these lines established, and then I applied it in the same way over here. Now I could go one-to-one, but I think that based on people's attention span, a lot of folks aren't going to want to hear it one-to-one. So I'm going to try my best to kind of breeze through this part, not go back and forth over and over and over again. So everything I did over here is pre-established in 2020. And I only go back and check just to kind of verify and show you. All right, so we're just going to walk through this area now. So here's what I did. Okay, I took that same parallel and I applied it to the top. It's a debate because there's a couple places it could be. None of these match up quite perfectly, and that's just the nature of it. But what I wanted to do was use the top motion here. They specifically opened at this value for some reason. I think there's another reason. It has to do with this kind of cross trend. We'll get to that later. But they specifically stopped it, in the 1180s. So that's where I'm going to place this trend. This is the parallel that the 2020 top had. So the longer this goes on, the more you would expect this to go up, right? But it's not significantly steep. And again, I can't really make the argument that it should be because it looks very similar to what was established here. And in some ways, it's kind of weird, but in some ways, this little guy almost looks like a smaller version of like a bigger picture thing. Minus maybe what happens at the end, which is very distributive. So I digress. Point is, that's where I put that. I went back down, I established the main trajectory up, and then I mirrored that trajectory down. Here's what I found by doing that. As soon as I did that, a lot of other things clicked into place, which is great. That's always a good sign. One being, where is the center mark here? The center mark here on this trajectory, we've hypothesized it's around August 5th. I've also hypothesized that it's around, remember when the change of character happened? It was like the 9th through the 12th. That pocket region also indicates the place where you kind of break down on this wave and you start trying to attempt to go back up. A lot of stuff was changing right here when these iterations finished. This to me is like another kind of nail in that coffin. So when you look at this picture and you see the way this is established, to say that it's not the same as 2020 would require that you kind of disprove it. And the first measurement that I made were these two cross angles. To me, that's okay. Well, there it is, Is it exactly where I necessarily expected it to be? No, it's a couple days off. But I'll tell you this much, it's essentially in the middle of this S-curve right here, the one that we finally saw build out into that fake out up to 520s. It's essentially like right in the center of that. It's on specifically Monday the 19th of August. That's where the intersection occurs, okay? So again, trend up, trend down, mirrored out. So I'm looking at that and I'm thinking, okay, that's the center mark of the wave. Then a lot of this other stuff makes some sense because when you establish that that's the middle of the wave up, then you have a way of kind of mirroring out the motion and you can see if it's proportionate. This part does require a little bit of explanation. I won't give a lot, but I did a triangulation, okay? So what I did is I went back to 2020 and I looked at the angles not just from the bottom, but also from the tops. So just like there's establishing trends going up, there's establishing trends going down. There's establishing trajectories going down. So one of the things I wanted to do was to determine whether or not, first of all, was this pretty equivalent? Yes, it is. It's pretty equivalent. It's not perfect. The peak here and the peak here are not perfectly 50% around that intersection, all right? This is the box that I drew, but just to check it out and see, they're not. Are they close? Yes, they're close. What's really fascinating here is that the intersection of these 2 points, and this is going to kind of blow your mind. I don't know how exactly to explain this other than it just works. Based on the distance traveled downward, okay, it turns out, and you can see with these triangles, I've drawn them out, but it turns out that, yes, this parallel, this is 147 degrees, this is 100 and probably negative 147 degrees right here, right? That's the way I did the purple and the blue. We already talked about that. That's the same thing that we did, right? So that's the general wave up, wave down. That's the generality of it. It's going this way and then it's going that way, okay? But they're being used as creek crosses as well. And you see that when it finally broke out, it actually jumped over that wave down. But before it did that, it established a second wave. It established a second creek. And that second creek is the one that you're seeing here. It's the other side of this triangle. So there's two creeks. One is the flip-flop. Flip-flop. One is the, so dumb, Booksy. Try to use good language, Booksy. One is the mirrored trajectory, right, of the upward move, up, then down. So it's a sine wave. You're going up, then you're going down. And that's from peak to peak. The other is this guy, which is establishing like a short-term creek, right, to the downside. When you mirror this one out from the center of the wave, because again, we're operating under assumption that there's logic here, that it's not illogical, although some may think TA is illogical. We're not going to do that. We're going to operate under the assumption that this is indeed logical, and this is your wave up and wave down. And therefore, if it's essentially mirrored outward, if you have a similar wave in the middle on the top, and we do, that you should be able to then establish trajectories down and then back up. So I'm using this, and all I did was I mirrored it outward. And interestingly, or maybe not, I don't know, depending on the way you think about it, interestingly, this intersects the other trend. So this is forward thinking, this is forward thinking, this is more reverse thinking, this is more reverse thinking. Okay? Meaning I'm taking it and like mirroring it. I'm mirroring this other side, and interestingly, where it intersects this first established trend is on that trajectory line. So based on the distance traveled here, I don't know how, because it almost doesn't make sense. You would think that they would have to be the same. Like, why are they not exactly the same? Like, why wouldn't they hit the same point at the same time, at the same top? Well, maybe there's a way you can do it where they do, but when I did this, they essentially intersected right at that peak on this marker. Now, here's the thing. It doesn't actually get there at that time. It gets there a little early, and it doesn't even break down at that time. It actually kind of breaks down like to the downside at that time. So the timing of it's not really exact, but the trajectory of it is pretty much dead on. And then this is the point that I wanted to kind of sort of stick with right here, is like when I looked back at this, I thought, okay, that's interesting. It broke out there from that wave trajectory being mirrored. It broke out there. That's when it had the SOS in the range. That's cool. It was very timed well. It also intersected this other trajectory. That's cool. So there's kind of like an easy cross section here of these waves. What happened in our time frame at the same time? Like, what was going on right here? Has this already happened? Because shouldn't this be like the breakout moment, right? Should be, in theory. If you did it right, and it's the same basic setup, there should be a proportional breakout. This is going to blow some of your freaking minds away because I kid you not, I did this, and I was like, are you serious? The moment that occurred, and you can adjust this up and down, but the best way to kind of do it is either to abide by this bottom here, which was established in August 5th, or like some of the tops and the crosses that are back here in July, okay? And I did the same thing, and you might be saying, well, why there? Why not like way over here or this or that? There's reasons for that. I don't want to get too deep into it. But I kid you not, the date that came up was that Friday the 13th. The reason that's crazy is because the Friday cross that didn't happen, this was the day that right before FOMC we set up, and it had the cat ear, and it could have crossed, and it didn't. And had it crossed here, it would have been above that creek. This is not, like, to me, this is not, there's no flexibility here. Like, this is where it is, this is where this is. So it jumped, it actually did do the jump. And this is where I'm like, what? So it actually did do the jump here. It approached it, it retreated, and then it jumped. It looks like a pink line on my chart. It's that mirroring trajectory. That's when it took off in 2020. However, when that happened in 2020 and it jumped over that mark, it was in such a way that this pink line was also where the SOS was. Now you're looking at this and you're like, that's not where the SOS is, Booksy. There's no SOS mark right here. No, there's not. It is, however, where the creek is at this time. The creek is also right there at the same spot at $5. So already this is set up differently because it has not established. It would, in order for this to have worked, this would have had to been a steeper. This blue line would have had to been steeper like over here. This would have been steeper over here, and this would have had to broken out earlier, way up here, at like $6, right? Instead, it's this kind of long-winded approach to get there, and then it finally gets there, and even if it broke right there, that's not an SOS. Is it a potential creek jump? Yes. So it is a very important part. The reason why this blew my mind when I'm doing it is because not only like a day or two ago, we did a comparison with IWM, and that IWM comparison talked about Friday the 13th and how when you go back and you look at what happened before the May run-up of this year, the AMC May run-up of this year was that IWM did a creek jump and AMC didn't. IWM jumped the creek back in May, and I'm not going to go through this all over again. I'm just going to really briefly mention this setup. So this orange line on IWM chart right here basically represents what AMC was doing. Obviously, the prices are not the same, so you take that into consideration. What's crazy is that this same M cross that happens here on IWM establishes an S curve to the upside that terminated. It went from roughly the 19th of April up to the 15th of May. And what's bonkers is that AMC does the same thing from like roughly the same time period, but instead of breaking out on May 3rd and jumping the creek and just continuing an S curve, it spends time going back down for liquidity and ends up going for a spring. Now that spring wasn't super deep. We all know that's where the gap up is now. But the point being is that that's been pretty typical. This is actually what AMC did in relation to the market on the whole in 2020. When we go back to the AMC chart and you look at the big picture and you look at what happened in 2020, back in that COVID era, the market was already taking off and AMC was going back down for liquidity purposes. So this is another one of those things that I think in the back of your head is really important to note. We talk about the difference between an S curve and an M shape. They're not that different. The big difference is right here. Does it jump the creek and hold it? And if it doesn't, it goes back down for liquidity, right? And if it does, it should just continue upward in a more regular pattern. So this would have been like the middle of an S curve and you would have come back up. Notice that the target is the same. And this is the slingshot mentality. This is the thing that in March of 2022 back here, I noted because I said, you know, it's really bizarre to me because this sets up the same way where you have this kind of really simple to read like intersection, right? And it's like the market, it's not following the major market. It could have gone here, 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 and just done a simple S curve to the upside, which is what SPY is doing, you know. And that's what happened back here in 2020. By about September or thereabouts, maybe a little later than that, I think maybe September, October, the market on the whole was in an SOS and was already advancing to the upside. AMC, meanwhile, does this, what I call like a slingshot. Basically, it pulls away from the main move and goes down for liquidity. And then it has this massive like catch-up moment where it like shoots up past. And what's crazy about all this is it's essentially the exact same thing that we're still doing on AMC right now and what we just did in May. It's no different. It's the same operator. Or if it's not the same operator, they're using the same behavior patterns. And the proof is right there. When you look at AMC and where it eventually went to its all-time high early. But it did so after coming low and having this like slingshot moment. the market on the whole has a much more steady progression from the March bottom, and it doesn't ultimately finish until here. This should look very familiar because what we just talked about on IWM, and it ends in November of 2021, that's when the market kind of finally hits its highs and then it starts falling through. AMC was already on the down, so already in a distribution mode, it was already getting ready, right? But because it had this massive slingshot, it went away from the trend and then broke back up, rocketed around it. This is identical to what just happened here back in May. I mean, it's the exact same setup. AMC on May 3rd starts going away. IWM's kind of coasting back up, and then you get this big buy-in late in the game, specifically on May 10th. It's almost like a quarter of the way, almost is what it looks like. It was really like a week later. You get this big buy-in, and then you get this rocket past. And then it comes back down, and y'all, May 15th, it may not seem like it because you're like, well, I don't remember May 15th being that important. It was a Wednesday. That's the day that we finished the retracement, basically. And on AMC, when we came back down, May 15th ends up being the top of our range. And when you go back and you look at what happened here on this big whip around, it's specifically pinned back down under like the desired value on May 15th. Take a line, do yourself a favor, and just kind of look at this from the big market perspective. Drag a line from the bottom on the 16th up to May 15th, right? And just take a look at that. Take a look at that trend that's being established back here in April. It's the exact same motive. I mean, it's the exact same motive of operation. Like, it's the same exact thing. It's exactly the same that the operators are doing. They're establishing an uptrend, right? Then they're abandoning it. They're going down low for liquidity, and then you're doing this massive, almost 50-50 whip around, right? And then you're coming back down. Why am I saying this right now? Why am I mentioning this right now? It's imperative to understand that because this is why this blew my mind, because on Friday the 13th, we did the same thing. On Friday the 13th, the market takes a leap over the creek that it has right here. This is what happened on the 13th. It's exactly the same. The market takes a leap up. It starts making a progressive move by making a higher high here. Now, it doesn't have to end the same way. We don't know exactly what the future holds, and we don't need to know because we know that if it breaks down here, we're in for a long kind of slog. This is going to be like a big range. But frankly, if you look at this lower portion looks a lot more like AMC, doesn't it? This lower portion looks more like the AMC move right here back in May, back in 2020. This lower portion looks a lot more like that than it does what we would necessarily expect IWM or the SPY to do or whatever. Rather, when you look at where IWM has traditionally gone, it would follow the S-curve out. The S-curve leads you back up to maybe the 250s, right? That's what this established S-curve does here. So the only thing that's missing, and this is what I was making a point of a couple days ago, the only thing that was missing was the back test on the creek, which did happen here. But once it got the back test on the creek, it accelerates, it goes ahead and finishes the S-curve. Meanwhile, AMC is going down for a spring and chilling out, looking like it's not going to go anywhere, and then all of a sudden it just catches up. And really, in our case, it would probably be something like this, right? And all of a sudden it would just rocket past it, and then presumably, if it were the same as what happened last time, and it doesn't have to be, but although we've seen it multiple times now, you're kind of like, maybe it's exactly the same. It's not that complicated. They're going down for a liquidity pull so they can achieve a certain target on the upside, and then when that displacement happens, they're able to then bring it back down to the level that they want it. It's a huger pump and dump scheme on a stock that probably is easy to do that on. So a similar move might be expected on AMC, and we talked about this like a couple days ago. So to come back in here and to do this analysis and to triangulate it and say, when was that date when were we supposedly going to cross up and just break out? It was Friday the 13th. And I'm sitting here like shaking my head like, yeah. You know, I say this, you can't make stuff up kind of stuff all the time. And it may sound like, well, it's just convenient that it always seems to work. You know, you find the answer like right after it happens and blah, 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 blah. No, everything's easier in retrospect. It's always easier once you have the data there. And all of the future prospect, whatever you want to call it, anything like that has to be based on the established trends. If you don't have an established trend, you don't really have what you need. The only other way to do technical analysis is through like the options chain or something like that, right? And then we're using stuff like P&F to help us with those price targets, but like fib retracements or suggestions, like there's all kinds of other things you can use that suggest where you may go, but ultimately until the price action happens and you get more and more information, it's like whittling away at a statue. It starts as a block, and then you get the general shapes, and then you get the more details, and eventually you get a really strong picture of what you're supposed to see. It's much the same way in the market. So when I look at this, you might say like, well, it's convenient. I look at it, I'm like, that's not convenient. To me, that's like, okay, I've got a picture here that's unfortunate because it looks like that's the place it could have advanced, and it definitely is the jump over that trend. So what's happening? Why is it different than what we experienced in 2020? Well, it's actually not that complicated. It's pretty simple. In 2020, there is no like spring-like motion per se in this movement. It essentially hits a low here. It goes down to $20 in this chart, comes back up, does a simple S-curve wave, and then comes back out. There's no obvious spring moment. Now, is there that kind of generalized shape that we've talked about? Sure, like it's there, but it doesn't ever come back below that bottom, and that's pretty clear to see. Like you can see the push up and then the little cat ears, and then you can see the M cross down bottom. It's essentially just a wave up, wave down. I just illustrated that a couple times to just show you guys that principle of, it's simple, right? It's the same thing every time, but this never goes for a spring. It doesn't do that. It just doesn't. So again, like the comparison might be pretty darn close to 1-to-1, but one thing that didn't happen here was it never went for a spring. The other thing that didn't happen in 2020 is that this parallel obviously was set up as a SOS. So had this come up above here, right? Sorry. Change the tool real quick. Had this come up above back in 2020 and then kind of slumped, we would probably say that it was backing up to like a creek. Like that's the way I would have looked at this back then. I wouldn't have assumed that it necessarily was distributive, but I would have looked at it and said, oh, it's backing up to the creek. So if it had done an SOS here and then started backing way up, I would have been like, oh, it's backing up to the creek. But if this had come back down through here, I would have been like, that's distribution. And it would have been a sign of distribution. And you couldn't have had it come lower. It's not possible. So there's a couple distinctions that have to be made, and that is that like the setup right now is just different. It's not established it as an SOS. It established it as just a simple creek cross moment that didn't happen. It is important. It's not important. I think it's very important. But at the same time, does this coming down then necessitate distribution? No, it doesn't. It's set up differently. Could it signify a distribution moment? Sure. Does it have to? No. Why? Because it's set up differently. It doesn't. This was not some high push above the top of the range. It doesn't. It just doesn't have the same principles. Like they don't apply here. So it's interesting to me because A, it's that Friday the 13th moment. B, it does look a lot like what AMC has done in the past when it goes low for a spring while the rest of the market's setting up like an S-curve. So instead of doing the S-curve where it's kind of going higher route, it's doing the low M cross where it's not crossing, it's just kind of creating that second top and then coming down. And it does that either in a form of distribution or a spring-like action, and it really depends on what the market on the whole does, right? Typically, I think it's a delayed action. It's a way of kind of delaying AMC, possibly for a liquidity rotation. So when I look at it right now, part of me thinks, well, it's busted. It didn't do what 2020 did, so it's not going to follow through. But then the other part of me is like, no, it's not that complicated. It's pretty simple. AMC has largely been doing this ever since the 2020s, which is it has been pulling away from, on that big picture it did there, it's been pulling away from the greater market trend and establishing itself by going low and then doing a slingshot. So I went and I looked at where those are, and I thought, well, if it does a slingshot, how low could it go, right? And there's two spots. One is right where we are right now. Easy. Nothing's changed. Literally, if it can break out here and it comes back above the creek at 475, I think it's going to get that October move. I think it correlates pretty well if this setup runs next week. If IWM starts running next week, I think there's a decent chance if IWM can get to this low this week, and then it takes off next week and it starts pushing back over the tops at 225s. So this is really important. This is an if-then statement. If that happens, then I think there's a decent chance that AMC stays low next week, but then on the 14th, basically has its breakout moments, right? And it could stay low. It could come up to 475. It doesn't really matter. I drew this kind of like willy-nilly. I didn't really look at the timing that closely, but it'd be basically the 14th. I put the marker on here that basically you don't take off till the 14th because it would be about a week later, and it would probably be even slightly more than that because of the scale of this thing. But basically you would take off to the upside afterwards, and you would play catch-up. The 50-50 then has to make sense, right? So in the grand scheme of things, what exactly is being targeted here? Now, I've argued a couple times in the past about 1388. Some of you guys remember that number. 1388 was one of those numbers that came up really early on. It's basically the top here on this hook. When we first dropped into the range, it's like the original preliminary support. It's the earliest major drops right before the major sell-off, right? Big one at the end. Primary sell-off. And I've kind of thought for a long time that maybe that's meant to be like the ceiling. Then we go along and time passes and we look at other targets and we're seeing that more and more and more. It kind of looks like it would break out from that because it's like, well, you're getting these higher targets now. PNF point and figure says that you could get all the way up to $16, $17. You have enough cause to rise all the way to $16, $17. So what gives? Why would you still think that that's even at play if it's potential that it could go even higher than that? There's another marker here on the gap, which is at 1656. That's another potential place I think that you could consider. But I also feel like that 1388 has never really gone away. It kind of keeps coming back in. When I did the measurement, as simple as I can put it, it triangulates. Okay? So I'll be darned if it doesn't, but it definitely does. It triangulates. So again, this is the parallel that I drove all the way through the chart. I checked it. Works pretty well overall, and it's the same one that was used in 2020. Does not have to be the same one used now, but again, I'll be darned if it doesn't match up, right? Now you're like, well, of course it's going to match up. It's going to match up somewhere. Eventually they're going to intersect. Yeah. But I'm talking about 3 lines right now triangulating to roughly this $13 level. And I've been arguing that maybe the reason that they're not going to go that high is because if they want to go back down in the future, they truncate that move so that they don't go so high that it's distributive, right? So it has to be between 1180 and like 1388 or something like that, right? That doesn't seem reasonable. Some people are like, well, that's not reasonable. Remember, this in extended hours went higher. And it's very possible, in my brain, I think about this stuff and I'm like, I could see the operator doing this, no problem. They could bring it all the way up to $16 and then pre-market take it all the way back down to 13 and nobody gets to trade 16 to 13. I could see them doing it very easily. And kind of accomplishing both targets that are in mind here. I'm not saying they will do that, and I'm not saying it couldn't break out either, but I'm saying like that's a possibility, okay? It's also a possibility that it goes a little higher than expected. when I looked at the 2020 example, it didn't get there at that time. It got there a little early. And in addition to that, this is kind of the lowest I can draw this parallel. You can draw it quite a bit higher. You can draw it up to like here. When I do it according to, again, where that parallel intersects this top, it actually works really, really well. And then not only that, but it's triangulating another creek, which is probably one of the most important ones. It's triangulating this major creek here. Now I just highlighted it. So where is it going? Probably going up to test that creek. When does this triangulate? This triangulates way out in December. So again, you're going to be like, well, that sucks because I don't want to wait till December. Be pushing it back, pushing it back, pushing it back. Yeah, I get it. This triangulation has been here the whole time. This hasn't changed. There's been other trajectories that we've used for earlier target breakouts that would have been higher because you could have come up to 17 or 18 early on and you would have hit that same creek, right? Like it would have established a similar second top that's higher, albeit it would have done so while breaking out above a pretty key level. I noted that when we did the PNF, and a lot of people probably weren't here for that, that average target on the PNF, which is point and figure measurement, was 1632. I went back and I looked at where 1632 was, and 1632 is the liquid center from 2020. So again, it's like, I get where people are coming up with like the bigger numbers. I've found them myself a couple times here and there doing different kinds of things. But on average, this is the liquid center of, and I guess I could bring it up if you really need to see it. This is the liquidity center. This is the highest liquidity shelf that we have from 2020. It's at 1650 basically, 1630s. That's the PNF target average that I got, which is kind of crazy, right? So it seems to me, and then also what's even crazier, is even weirder, is if you look at what happened in elections of 2020, they whip around that value. Like this is where the elections are. It's kind of a weird date because it goes through like November 9th is a Monday and it's like a gap up day, right? This is kind of strange because you're like, well, which do I pick? I don't know. But the point is like you take this top to bottom and look at the whip around. It's whipping around this target specifically at 1632 4 years ago, almost exactly, right? 4 years ago. But this is specifically on the elections. So there's a strange correlation between the high liquidity target, where the elections took place, where they're anchoring it before they do that spring dip in 2020, which would have been just after the elections, where we are now going into the elections, and then looking at this, where is that intersecting, right? It's up here. And just, again, it kind of looks like we wouldn't get there, but there's enough ammunition here to get there. So you're like, well, which is it? Are we going to get there? Are we not going to get there? What's going to happen? Well, I could tell you that, yeah, we're definitely going to get there. Or I could say, I'm not really sure. But I'll say this, at least to my mind, in my knowledge, and like the way I'm looking at this is like, I look at it as aggregate. Like there's a bunch of data points. You think about them as they all have kind of somewhat importance, but then you have to look at them all together. And all together, it's just kind of all been the same. Altogether, it's always been this pocket here. It's never really changed. I mean, if you had come back, if you go back and look at a stream from like July, it would have been the same pocket. Like it's because the targets are just adjusting time-wise. They're not really adjusting height-wise. And in fact, the only thing that's really adjusted height-wise is the PNF because we've built out more columns and it's given us more cause for that kind of move. But the targets on the curves have always been kind of the same region. And they've always been targeting that main creek. Like that would be kind of one of your predominant goals in going up there if you're going to go up there. Okay. So I look at this and I think there's two possibilities that seem most obvious to me. All right. So number one is the possibility that, yeah, AMC runs maybe a week after IWM, maybe on that 14th, and it does run, but it does a 50-50 swing. I don't really want to get into this blue line right now. There's another parallel here that applied, and it's a really important one long term, but I don't want to get into this part just yet. I'm going to mention it, and then I'm going to like kind of leave it at that for now. Basically, there's like a second parallel that's like a 50-50 around this swing, and it's a parallel that matches this mirrored parallel. This ends up ultimately being where the bottom is in 2020. It's the major kind of whip around that's used. So it's essentially like establishes a width of a new sine wave with this move. So it's creating a move outward away from this motion, and then it creates like a new wave. I wish I could do this like somehow more interactively. Basically, like the push away from the initial creek establishes a new wave down. And when it does that, this parallel is about halfway up that wave, and it ends up being the same parallel. It times out really well. I've done it a couple times. I'm like, yeah, it times out pretty darn well, but it's not perfect either. So it's whatever. Okay. So here's what theory one is. You go up in October, and we'll get to this in a second. The laters, the fallout, as I'll call it. We go up in October. You build out, and then basically you're camping around $8 going into earnings, which is apparently right around election time. Right now it's estimated to be the 4th. I don't know if it's going to change, but basically you have earnings on the 4th, and then you have elections on the 8th. I think at this particular point in time, if it does the early move and it's doing the catch-up move, it's a lot more like what traditionally happens, which is you make a larger kind of 50-50 jump here. It turns out that this trajectory that we kind of abandoned would then have to be kind of caught up to, right? And so it's possible we're not quite this high. My estimation is that you come up to the 8s. There's other reasons I think we might hit like near 873 or something like that. don't want to get into that too much. But basically you come up to this pocket right here, which is again a pretty important support from about 722, this trading range up to 840. That is a very good potential, because if you come up there and then you can reestablish a floor at like 710, then right after elections are announced or whatever, you could get a little rocket right to the upside, and it's basically completing like a perfect 50-50 swing. So there's kind of a halfway point when you get to earnings and elections. Here's the funny thing about this, and this is another thing. It's like, well, okay, that's fine, but does that really obey the PNF? Well, no, it doesn't, because in theory, if this PNF takes off in this range, even with a spring, it's not going to go significantly lower. The price action isn't. It just isn't. I don't give a crap what you guys think about where the bottom really should be or whatever. There's no way that this range by itself has set up a floor anywhere below the lowest point, which is, around this like 416, 415 marker. There's just no way. So like, it doesn't make any difference if you're looking at the previous range and If you just looked at this range, there is no other floor. So like for me to say like, oh, it could go to 350, that's like not really in the range anymore, right? No, it's not. In some ways, it doesn't really make sense. Like it's like that's way too low, right? So the reason I'm bringing this up is because the point and figure depends on the bottom measurement for the final goal, and the bottom measurement being like the 415, 416 area. Depends on the way that I know it sounds weird because you have to like understand point and figure, the way it adds up, the numbers and stuff. The floor is not always the same, which is kind of weird depending on what you use as a criteria for movement, which also is kind of confusing. Suffice to say, it's a little different on different setups. So like sometimes the floor is there, sometimes the floor is a little higher, sometimes a little lower. It just depends on how you establish your what's called your box length, the distance required to mark a box. I can't explain it more than that without going into great detail. But point is like 416 on most of them is the best price to go from. What's interesting to me, I took that PNF measurement and I took it and I applied it to what I think is like a potential for a breakdown here, but I didn't know what would happen. I took it and I applied it back down to 350, and when you do that, it shifts the target back to 1364. Like offsetting it downward more and then pushing out the run, you might think, oh, well, that's going to require that they add more boxes, more columns, so it would be a greater distance traveled. Yeah, maybe, but they can compress this type of movement and they can basically trade it with super low volume where there's very little change over time, and that doesn't really change the cause built up. It's a way of simply delaying the price movement and positioning in a different spot, and that's like a shifting of the value. So I looked at this and I thought, for the longest time I've been thinking like, well, 425's got to be some kind of important level for a lot of reasons, and then I'm looking at it like, if it hooks here, what happens? There's a decent chance that the 350s are being targeted. Now, I've got it coming out to like November 4th, but in reality, it could be like way earlier. And you guys are like, well, that's completely the opposite of what you just said a minute ago. Yeah, it kind of is, and it's kind of frustrating. But the point is if it hooks here, it's an easy enough thing to determine. If it hooks and it kind of crashes down to 4, and then it can't recover back above 465, and that's critical, then I think there's a strong chance it could head to 350, because essentially that's just an LSPY breakdown, and then it would have to come down and have a change of character. There's a lot of trends established here, not this pink one, notwithstanding, it's the same thing. It's pointing towards that same area down here in October. You can do all of this without actually breaking that. You can establish like a little bit of a hook here and then drop low. So there's a potent potential, a good potential, that this thing could run up as early as the 14th. There's also a potential that we get what we would call like a hook around the same time period. And I wonder, part of me wonders if it has more to do with what happens here on IWM. If it takes longer and has more downside, you might see something like that happen as well. So another if-then statement, if IWM does not break out next week, but slogs downward and starts heading low towards like the 210s, it is very possible, and we'll have to wait and see what happens, that AMC doesn't actually break these creeks. And whenever it doesn't break a creek, remember, it doesn't just go away. It's not like, oh, it's just gone. No, it's essentially still persisting as long as it needs to persist. You can see that that widens out this area down low for potential trading in a sideways range from like late October through November, essentially. Now, you ask me, is that likely to happen? Look, there's people out there who've already thought that was what was going to happen. They already thought it was going to come to 4 or going to 350 or 380. There's plenty of folks out there that are going to be like, yes, Booksy, that's what I already thought was going to happen. Finally, you're figuring it out, you idiot. Look, I don't think that when I look at stuff like this, I don't think it's as scripted as people want to say it is. I think that there are trends that are established as likely trajectories, but I can't help but look at it and see those LPS spring moments, the drops, as not determined. I don't think it's predetermined all the time. Sometimes it doesn't. It's when you look back, you're like, oh, that seemed like it had to happen. Other times it's like, I don't know. Maybe it was purely just for liquidity purposes. Liquidity drives the market. If they don't have enough liquid to move it up, they're going to continue to drive it down. Like, that's simple. Do I think an operator always 100% knows? Maybe not. The human element, I don't think they know. Does the computer that's doing all those crazy computations, the quantum computers, do they know early on in the range? Maybe. I think as they trade the range, they're probably already making that decision. And I think that's why we start seeing evidence of that. It's just like footprints, right, in the sand. Or footprints in the mud, right? You're seeing evidence of those decisions being made here when we are not breaking out on the 15th, when we're not breaking out, on the 26th, when we're not breaking out on the 12th. You're seeing evidences of there's a liquidity problem. You're not advancing. You're going down. You keep enlisting sellers, and then you keep going down. Does it need a spring? more and more and more you're saying, yeah, it probably needs a spring, right? But the question of does it need to come to XYZ level in order to make that's I personally think that's an opinion. It's like someone saying it has to hit a certain fib, it has to do this, it has to do that. I think that's bullcrap. Okay? I think that the operator, and I don't mean it in like a mean way. I just think that the operator has a typical pattern that they'll follow, but if there's an exception, they're going to follow the exception when it makes sense. It does not have to be like an every time thing. Does AMC like deep retracements? Yes. Why? Probably because it's often enlisting a lot of sellers. But if there's instances where the sellers are not there and they're not enlisting enough sellers, is it possible that they don't do the same thing? Yeah. We've seen LPSs in ranges. This is an example back here of one that, yeah, it kind of has a little spring dip at the very end, but ultimately on the big picture, it just looks like it keeps making higher highs, higher lows rather. It doesn't really look like what we see as a traditional spring back in May. There are exceptions. And so when I look at the big picture, like, I want you guys to know that I think these are kind of all equally probable in my mind. But I do have this in the back of my head, this sense of like, what is AMC more prone to do in these moments? What seems to be more likely the case in a lot of these moments? In a lot of these moments, it tends to like to play the delay card and drive the price low and create that slingshot. When I looked at this big picture, I could see it playing out with this October run and then another secondary run pretty easily. I could see it playing out where it just shoots straight up to 17 pretty easily. Timing-wise, the range itself is kind of built out already. The main wave cross, which began back here in like June, this down up kind of business, should be ending this week. But beyond that, when I look at the bigger picture, it's impossible for me to look at this and not say, do the same thing we did before and say, well, where should that top roughly be? And it doesn't appear necessary early on. It feels like it's particularly trying to delay it. And I think what we did is we established this one probably back here, which one we're going to use. But ultimately, like, the original trajectory is really wide. And I think the question comes down to, like, could this have played out differently and set up differently and blah, 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 blah. Yes, but it didn't. Like, had this done different things in this middle area right here from July to September, we might not be having this conversation. It really could have been very different. But at the end of the day, the way they interacted with this main trajectory upward, they didn't do it in the same way they did in 2020. In 2020, I'm just giving you like a comparison. What we would have probably seen is that the SOS would have been somewhere over here. Again, back here, maybe in even as early as, I would say, August. I think it could have been right here when that change of character happened, because you could have immediately pushed up into SOS mode. But here's the funny thing about this, is that if you go to that 2020 example that I just talked about, it's like a stair step. It's actually really slow. And so the first move is pretty slow and the second move is pretty slow. We don't really have that same thing right here. We have a really fast move up and down on the first move, and then the second, and then the middle seems to be just like painfully slow. But it's definitely more bowl-shaped in 2020. There's a lot more of a steady decline. When you have that drop down in the 2020, it's really more like this, this kind of like steady decline. It's not this drop and then sideways business. So again, you can't take things and say like, oh, it's got to look this way or it's got to look that way. I don't think that's true. I think you just have to look at the wave as it is. And right now, what seems to be the operative function here, what seems to be the thing that is most likely, is the drive away from that trend in order to come back to it and essentially have like a macro whip around here. That's very similar to like what happened in May. It's the most consistent thing. So is it frustrating for me? Yeah, because I'm sitting here saying basically, yeah, I was wrong. This could even be more likely than this. Do I take pride in that and enjoy having to do that? No. And in some ways, I look at these things, I brush them off my shoulder because I'm like, I don't expect me to be right every time. But for a lot of folks, they look at this and they think, well, it's got to be right every time. And when he's not right, he's an idiot and I got to unsubscribe or whatever. I don't know. You judge if you want to judge. Be curious if you want to be curious. Show mercy if you want to show mercy. I don't really care. It's your choice. But this, to me, looking at it now, seems like a simple enough drive for liquidity on top of this trend until you find the bottom. And we can easily do that by watching the creek and monitoring it. Right now, I'm assuming that it's going to bow out, but really it doesn't have to. I've got it kind of drawn out over here. I'm wiggling around the screen right now. Like it looks like a little worm, like a little S-curve noodle. It doesn't have to be that way. It could continue downward for a while until it finally jumps. All we know is that this is a downward oppression right here, and we haven't made the jumps yet. And we're trying. And as soon as you make that jump, I think, as soon as that jump is made and that creek is breached, I think it's going to take off and catch serious steam. And it's going to be like, oh my gosh, what just happened kind of moments where you're like, I don't even know. Oh, I deleted the wrong line. I don't even know what happened. All of a sudden it's just flying, right? And people will come back and say, well, no one could have guessed that this was going to happen. No. Right? Every time it's the same, right? It came out of nowhere. Well, it probably won't. It probably will come with a series of really tiny creek crosses that are super boring on a day when nobody really wants to watch the stock because they say it's going sideways. And they're like, oh, it's boring. It's going sideways. And it's like, oh, it's just going to drop again. It's not going to do the same thing, or it's going to do the same thing it always does. It's going sideways, and it's just going to chop, and all of a sudden it's going to take off. And people are like, what? What happened? Well, it's going to be when it jumps that creek. And the same thing happened back here. When it came down, it chopped and everyone was like, oh, it's going down and it's chilling. I'm sitting there like, it looks really good because it had advanced in a way that was very healthy. And it was compressing. But it always ends with like a whimper. And people are like, oh, it came out of nowhere. It's like, well, it jumps the creek. I mean, that's as simple as it needs to be. And that's when the buy-in happens. It's not typically down here. You're not going to see a huge high. We saw historically low volume yesterday. You're not going to see historically high volume right before they take it off. You're not going to see a massively stacked options chain that tells you max pains at $15 next week. You're just not going to see that. Like, you're not going to get this huge heads up because that doesn't make any sense. It goes completely against, unless it's like a fake out, it goes completely against what an operator is trying to do in a range that's going up, right? It just doesn't make any sense. And that for a lot of folks, it's like, it's going to feel like comes out of left field, but it's going to just gently move across these trends. It's going to be kind of boring. And then all of a sudden it's not going to be. And I've got a couple dates in mind, and that's about as far as I can take it right now. I do not want to go into this because I think this is going to tick a lot of people off, but also because I'm prepared for that, but I also want to just mention it really quick, and I don't want to try to over-explain this. I said it earlier in the stream that there seemed to be a pretty decent conclusion that I've been finding that somewhere around summer of next year, we would be back into a low position. That's roughly accurate. It may be more like early part of the year, not necessarily winter, but like spring, because there's a lot of things here that I haven't hammered out. One of them is this trend right here. This trend right here is a very steep trend. In 2020, it doesn't determine the bottom, but it does determine where that gap fill is, which is kind of crazy because it makes it seem like it would come crashing down early November, right? And it almost seemed like that's too soon. There's a secondary one that hasn't been established yet. And that one ends up being more important in 2020 anyways. And that ends up being where the bottom is. It's essentially, again, the build out on that wave. But I'll say this. There's a simpler way of understanding where that bottom is. And so if you were like looking at all this and you're like, well, that's cool. We can go up top here and then what? We're going to crash. Well, look, it's really not that complex. It's kind of like what we were talking about earlier in the stream. When you have a series of, just going to delete these. Hang on. When you have that series of parallels, I'm going to bring one of those back. Hold on. And you can use those to identify kind of where you're anchoring. You should definitely take time and see if that also works potentially as a check for like the bottom, right? So one thing is that I went back and I looked at what else was going on here in 2020 was that you have this being met as a parallel as well. It's not just, yeah, it came back down to the bottom. Yes, it did. And then it made a little spring action, really small one, but it did right here, just like a penny or two below the previous bottom. But I mentioned this maybe, this feels like a long time ago. I tried to keep this as brief as possible, but like I said, it's probably the most important big term analysis we've done in a while, maybe in a couple months even. And I think that when you go back and you look and you determine like, well, where exactly did this need to come back to and all this stuff, it's a debatable point. It's not something that I think is necessarily cookie cutter, okay? But I want to point something out here that I think you guys are going to be like, oh, okay, I get it now, maybe. So notice that when I zoom in here on 2020, okay, notice that this line that, again, I drew it. I already talked about what this is, where it came from, that really early 2015 M shape. It even comes back from like 2014. It's there like right at the beginning of the stock, this trend is. Notice that this is where we anchor in March of 2020 and then April. There's like multiple hit points right here on this little wave bottom. So if you're looking at this zigzag, it's like whipping around this value right here. And then it hits here and it gaps down and then it goes down further and then it hits here and then it gaps up. Okay. Here's what I want to point out. When we come back down, right, we're not just going back down to fill a gap, which seems like the obvious reason why you came back here, maybe why you gapped up again, right? This is around elections. We also come back down and for whatever reason, we're hitting that trend again. And it actually, that's exactly where it stops. I got to be honest with you. I've been looking at this chart for years now. And for the life of me, I could never really determine why it came this low. Like, why did it hit right here of all places? And the only thing I could say about it was that, well, maybe it's because of this early support here in 2020. And that's that. There's really no other places it directly touches it. Like, there's one spot early on a horizontal level. And then later when you leave, you're like, well, maybe it was really important because then it takes off, right? Backs up to that, near that level. Near it, but not quite on it. It just doesn't match with a lot of stuff. So I've never really been able to sit here and say like confidently, like this is probably why it hit there till right now. I think this is why it hit there. I think this is like one of the main reasons. And then what's even more interesting is that when you come back later and you look at where that spring intercepts the bottom, it's essentially like an intersection, not interception. Interception is football or whatever. Intersection, we're across right here of that parallel. Okay. So what, Booksy? Drag it down like a few millimeters to where the gap is instead. Not where that support was here, not where that preliminary support was here on the drop in 2020, but instead, where does it gap up? And then look at where the spring is. I didn't move this line, right? You guys are witnessing, bear witness to this. Like I'm showing you right now. That's where the gap is. That's where the gap up happens right here. All right. Same parallel we were looking at earlier. Same idea, same concept, same build out, very similar build out anyways. I didn't move this. So I'm just going to be very clear about this. It's the same parallel we used earlier on the stream. Maybe like 30 minutes ago or whatever it was, 40 minutes ago. I'm dragging this down here to where we are currently. And I want you to notice where it is in relation to the gap that we have right now. Now, is it perfect? No. Is it really darn close to where that gap appeared presently? Yes. When I look at this, I cannot help but imagine that that's important, right? And in addition to that, when you look at the bigger picture then, and you take that into consideration, like, okay, so basically the spring came back and it hit that intersection from where that gap was. If I take that same approach here, and I go to the bottom of the gap, because that's where it's at, the closing value here is 291. Now, I'm not going to get it perfect because I don't have a snapping feature right here on this particular line that'll work. But I'm going to zoom in and I'm going to show you what that looks like as best I can, and that you can see it visually, the importance of this trend. But I'm going to do my best to kind of eyeball it. Notice that that's where the gap down starts on April 9th. That's where the gap up starts on May 10th. Okay. In the future, how long would it take to get down to that point again? Well, this is where things get a little bit crazy because there is no middle target here that's perfect. And like I said, the middle, which is established, pretty well established here in this time frame by the wave structure, it's not a complicated wave structure. It's actually very simple. I make things look maybe complex sometimes. It's pretty straightforward. Like we looked at this before a few minutes ago. And oops, I hid the chart. That's the wave structure, right there. That's the determining factor perhaps of where this comes back down. But ultimately, like, we can't really know because this is not the center of the wave. So unfortunately, if you just drive it out to the center of the bigger picture, it doesn't really indicate much, does it? No, it doesn't. If we drag it out here, you're like, well, that doesn't really indicate much either, does it? But it does. And I've talked about this previously, but a lot of times I like to use where the wave cross is here as the center mark for like an S-curve or like a wave or something. I've been doing this more and more and more, and it yields better and better and better results. Instead of trying to pick the middle of the wave as you see it visually, because that's not usually right. In this case, is the wave visually strong? Yeah. Does it actually play out, again, with the parallels and the mirroring and all that? Does it play out really well? Yeah, it does. It's a really strong build out. It's not at all happenstance. It's like literally one-to-one, but except for this one thing, that's not actually where it changes direction. It changes direction when it starts jumping that downward motion, right? So if we were looking at this as a wave cross, we would be looking at this downward trend. This is where it changes direction. And the expectation would be that you would come back down here. And honestly, this is where things, again, you kind of say whatever you want to say about it. This is where things get kind of dicey because you're like, well, it did come there, Booksy, but then it came lower again later. Yeah. Question marks, right? I think at this point, you bring out the old wave cross technique instead, which is to use the 50-50 parallel instead of using what I'm doing right here. And this gives you a better indication of where that should be. In fact, it's so good that it's essentially perfect. You don't even need to guess because it essentially intersects almost exactly where you would expect it to, right? If you go to the bottom again, and that's where it basically hits the bottom. How did I do that? Because the 50-50 here is the wave jump. So this is the lowest portion of this wave, which is early on, pushing up to the highest portion of this wave, intersects the 50, goes down. That's the new established wave, right? It's actually not anchoring itself on anything but that. And that's where you get your trajectory, right? It's being built out. Think of it like a fan. Have you guys ever used the or the pitchfork? You ever use the pitchfork tool? It's kind of like that, right? You've got an angle and you've got an opposing angle, and then it creates an intersection, sort of like a crossbow or something, where it's pointing towards the direction it wants to go. These are things that you can't do until you get that top. So when I looked at the current trend as it stands, it's like, well, I don't really have the ability to do that, but I do know where that might be because we just talked about it. I do know where it may hit that top. It's pretty clear to me anyways that this is kind of that pocket region right there. It doesn't have to be perfect to do an estimation because we're just guessing. That's what an estimation is. It's an educated guess as to where that might be. So if that ends up being like the tippy top in the future, we have some idea perhaps of how this could potentially go. And there's a lot of ways to kind of do this. You can do it like I'm doing right now, which is to try to estimate from bottom to top. It's going to be like this really wide thing that doesn't really make sense. You could look at an established creek cross, which we don't have. So there's like a lot of information that's kind of missing. So what I did is I tried my best to estimate where that might be based on a number of things. And as far as I could tell, and I know it's kind of way out here in the distance. Again, I'm trying to like redraw this line. This is kind of like the best I could come up with, and it's not that great, I know. But it's like this is all I could do. I think when and if we have that secondary move and it can get above, the 650 area and it moves up to the 8s and then it moves up to like the 13s or whatever, I do believe that's going to happen still. And if it doesn't, then we're pretty lost anyways. Like in my book, I'm like, all right, well, I'm pretty lost anyways. But I would be looking at that saying like, well, where's that markup, and I can't tell you again, like exactly where it is if I don't know exactly where the finished product is supposed to be and all that jazz. Like if it's up here and it hits early and it hits around, that date, so be it. It's pretty close to accurate. Maybe it's a little bit wider out. I don't know. But what I can say is it's not the 50-50, right? It's not this middle from back here. It's not this middle on August 19th because that's not the way it sets up. It's specifically about where does it jump that creek, which is about Friday the 13th, but then it hasn't actually jumped the outer one. So we'd have to wait. And then we'd have to establish like the trend move, the position of the move. If this makes a lower low, it ends up coming down here, you basically have to like redraw it, there's all kinds of stuff that we'd have to look at from like a helicopter perspective and say, this is where it is. I don't have that information yet, but I think we can do a decent enough estimation based on what we have that I think it's in this pocket around 2025. I think that's really far. I think that people get angry thinking that that's going to take that long. But on the big picture, like, is that a year? Yeah, it's basically exactly a year from when this started. And if you're going to manufacture a massive move like you did in 2020 to 2021, you're going to need 10 months plus to do that. So the idea of it taking a long time, again, it may seem kind of offensive that this might need to come lower or whatever, and we just talked about that, to come back up. That this could come all the way back down seems ridiculous. But when you look at the big picture, it's not really that silly at all. And I went through this process a couple different times, and I kind of looked at, all right, so it came down to that gap. So where would this end up? And I kept coming up with like basically $2 even. That's significant because I think $1.92 was the original low. Which means, without going into too much detail, this is almost a cookie cutter, price-wise, it's almost a cookie cutter version of the same range. We're basically hitting like the same highlights, like that $2 range down here. I think this was more like 12 to 14 back in the day. I can't remember. I want to say it was like 12, but I could be wrong. I guess I could look back and see. Maybe it wasn't that high, but it's essentially like the same numbers, which is sort of strange. But yeah, I went and I looked at this and thought, okay, does that work in the big picture? Because we were talking about earlier how that main setup seemed pretty clear. I took a screenshot of it. I'll show it you again. It's just a matter of opinion, this part, because it's like, well, you don't know, right? You know for sure, right? No, I don't know for sure, but that's the same angle. It's a slightly less steep angle. It's not the exact same. It's a little bit different, right? And this would imply that you get out here either late 2025 or early 2026. So in taking that same time distance into account, it's actually pretty much the exact same. Pretty much. Okay, so it's a little odd because it's like, well, it looks like it'd be like not even close to the same if it lasted that. How could it spend that much time down bottom? Well, actually, it's pretty straightforward. If it does do that, and I don't know if it's going to push this high either. It may not be able to do this, And I didn't even talk about this other possibility yet. I hate to do this. I gotta go back and forth, back and forth, back and forth. But I did skip over this other possibility that this actually doesn't even come that high. This could reject in the 7s and 8s and then come down again. I don't want to get into that too much, but it has to do with this main uptrend. If it rejects here, it doesn't break back above what I call the ice. Essentially, it's like if you get to the SOS and then it fails here. If this pushes up to like an SOS on the big picture and then it fails, it'd probably be around here, and then it would just come back down. And you guys are like, well, that sucks. Yeah, it does. That's another day. We'll talk about that some other time. I was trying to give you the really brief explanation for where this number comes from specifically. And again, it may seem like kind of ridiculous because it's like, well, that's really far out there. Like, how can you possibly know that? We don't know it's going to come back down again. No, we don't. But right now, it's operating under a very simple series of parallels that are working out pretty darn well. Even the, and I didn't even show you guys this one, but even that hook right here in 2020 is the same as the hook here in November 2023. And then this push out, again, we talked about this. I don't want to get back into the same exact thing again, but this push out as an established uptrend ends up mattering like significantly throughout this stock as it moves around in terms of like how this presents itself. And it's still doing the same thing right now. So it's very possible this hits this mark and you guys are like, that would never happen. Yeah, I don't know about that. Never say never, right? This is a very similar setup, and it's a very strangely similar setup. And the only real major differences have to do with maybe some of the EMA levels and support levels and overall possibilities. I've already talked about why I don't think we get to 30-40 on the first push, because that's like a major creek break. And right now this intersects like where it needs to on the creek, and I don't think it's going to breach that. If it goes to 30-40 here, it's way outside that jump. There's no real reason to come back down unless you're distributing and you're going to go significantly lower. Like you would never push up here and jump this creek right here and then come all the way back. So it would only be like possible to do that if you didn't come back down. That's a whole nother setup. I've already kind of talked through that, but this push right here, when I went and looked at the big picture again, I kind of was like testing this idea, and I was seeing like, does this make sense from a big picture perspective? Does this make sense to do this? Can you have like a similar move, right? Well, like I said, it's a completely different analysis, so I'm not going to be able to address it right now. Like I addressed it earlier in the stream, and I already gave my reasons why I don't think it's going to jump this creek. So if we disagree about the creek jump, then we're going to disagree about everything else. I would love for you to like get on the Discord and like provide charts and stuff. It's hard for me to talk through things on stream with people because I can't fully see everything that's going on, right? It's hard for me to do that. So hit me up on there, and then we'll show me some charts, and then we'll walk through it, and then we can disagree and talk about the stuff and refine the views that we want to refine. Does this make sense as a first push here on the big picture? Sure. This would give us a lot of evidence as well of possibility, because if the first push on the big picture is just designed to get you out of this bottom in a spring action, which is an SOS, does this give you the SOS? You know, this was an SOS that had a backup to the creek, and then it went into a reaccumulation on top of the range right here. Does this give you like an adequate setup to do essentially the same thing, is my question. Because that to me has to make sense. If it doesn't make sense, then this whole thing could be shot in the foot and you wouldn't even mess with it, right? Well, yeah, it does, because again, like this creek wasn't jumped till way later here. And this is a really similar setup. You know, even going back to the middle, like this is that liquidity gap at $20. You could see this back up pretty far, almost all the way back down, basically a 50% retrace, just like this one. Look at the intersection of the yellow. See the intersection here? This yellow is your creek line. Notice the intersection here and here of those established creeks. Notice that if this comes up and breaches the top just a little bit, it's essentially also doing a gap fill. It's also coming back to that center fold marker here. It's pretty clean. Then you would have to reestablish, and it doesn't have to be identical. You know, a lot of these are going to look pretty different, I think, in the end. But you basically would come back up here and you'd reestablish this level, and then you'd push up again. And this is where things get kind of dicey, because you're like, wait a minute, Booksy, that's like 2026 right there, isn't it? Didn't you say February of 2026? Yes, I did. A lot of that has to do with some of these other markers that when we look at it, big picture, it's like there's a lot of intersection here to come back up and to reestablish a top in this particular point. And the history of the chart would be pretty straightforward, you know, probably there. I drew it a little different the first time, this hook. Point being, like, and maybe even in this, to this extent, like this is not even something I want to like go into in high detail, but like it's very possible that the this sets up as like a floor potentially for another potential distribution effort here. You know, we may see something very similar. I know it's not always going to be one-to-one, but it would not surprise me if there was a similarity here in that. So if I look at these range levels and I look at the interpretation of the chart, when I came back and I showed you guys this was actually a trajectory from the bottom. And I don't have that on the chart right now, but let's just demonstrate it. Let's do it live so you can see that I'm not pulling anyone's leg about it. So again, this was the trajectory from the bottom through the gap figure, and it establishes the tone of the main move. So what we're going to do is, I'm going to try my best here to make sure it's exact. Here through, screwed up already. This darn thing. I already did this once, so I don't want to like waste too much time on it, but we're going to establish here to there. That's where the gap is, and we're going to make this like bright blue. We're going to extend it, and then we're going to make it a little bit thicker. All right, that's where the bottom through the gap is. This is the main wave structure of this setup. This is how this trend was established in this wave right here, the turn of direction. And you have a similar thing happening right now. Very, very similar. We just haven't met the top. And I want you guys to determine for yourselves if you think it fits like a glove. It doesn't have to, but it could. See if I can make sure I get that. Hang on. Let me double check because I think it might have snapped the wick. So the closing value here is 291. So it must have hit the wick value. There we go. Okay. I'm going to zoom out. Now this has it going considerably earlier. So actually those look identical. So I must have done it wrong earlier. They look pretty much the same. That's 58, that's 57. So there's something off. There you go. Butchered my chart. I was expecting to like sink into place right in the right spot. So earlier when I did it, it obviously didn't establish in quite the right way. This is spot on. This is right where it's supposed to be. So let's just fix it. Let's make it right. I think the challenge is just not knowing where this hits the low. We just don't have the information we need. We need the intersection point, and I don't have it. I feel like I got to use this and this, but then it seems like it's even farther out. It seems like it would be like out here. $2. I mean, that's still summer. It's June. It's just really slow. But then again, I made this really slow. Well, parts of this work, parts of it don't. Maybe if it doesn't come as high. I know it sounds bad, but if it doesn't come as high here, let's say it only goes up like $8, then this is why I didn't want to get into this. I said it earlier. I said I wasn't going to get into this, and then I did it anyways. Because it's not like I just don't have the information. Like I don't have what I need to have yet. I need to have that data point, and I just don't have it. So I get kind of lost because I'm like, well, what do you do if you don't have what you need? I don't know where that wave is going to set up, what the angle is on that wave setup down yet. That's hard to say. But I suppose if it's as bad as it was back here and it just distributes really fast, I mean, it could be ridiculously fast down. So it's hard to, again, I don't know. There's so many angles here that I can't really pick it. It's good excuses, isn't it, Booksy? And then this doesn't work as well. This works really well over here where it jumps the creek later. It does not work well like earlier. I guess it doesn't really matter though. So it doesn't have to be 1-to-1. Yeah, anywho, I didn't work out the rest of this. I was trying to tell you when we started it. All I could say is that after this push up, what seemed most likely is you come back down here. So I'm going to have to spend some time on this and work on it. Clearly I did it wrong. But I don't have this data yet, so I don't know what to do. I'm going to have to figure it out. Yeah, I just don't have it yet. There's got to be something else I can use. It's the best way to do timing is to establish that downward wave. I guess in the off chance that that wave just failed, I don't even know how you would do that. And then it could be even steeper, but then it would like past tense. That doesn't really work. Like there is no easy answer here. Unless it comes down like really early this year. But then it doesn't make sense. So fundamentally, it makes sense to go back to $2. We were just at $2 in April. Tell me what's changed that suddenly it can't go back down there. Not trying to be a jerk, just question for the question. What has changed so much fundamentally from here to here? And you can say the debt, that's fine. I know we talked about the debt getting rolled out farther, but other than that, like what has fundamentally changed about the company's prospectus, like their cycles here, that you can't have an established range between $2 and $13 that you can trade? Because my argument is not, yeah, it's better, but my argument is that it's like that markets are future thinking. Like they should already be pricing in that. So if that's already priced in, it's not like something that's we're improving and we're going to catch up to it later. That's not the way the stock market works. So this whole move, this whole setup is already priced in that variable. It's just there already. Yeah, all of that stuff should be priced in. Stock markets 101, like the future, they're trading the future. You're not trading the present. So the question would be that if you already knew, like everybody and their grandma would have known, I'm not trying to be a jerk. I mean, I'm being a little bit of a jerk. That's a mean way to say it. Everybody would have known that the strikes would eventually end when we were dropping down. So clearly, like, that's a non-issue. I don't even think the strikes matter. Like, they already knew the box office was going to be weak when they, way before, like we did. It came down low, partially because of that reverse split motion and the ape stuff, partially because box office is going to be crappy anyways. They already knew they were going to fix their debt. My argument has been, and I think there's a disconnect. There's a disconnect between this topic of fundamentals and the topic of a cumulative range. Guys, what I'm arguing is that this is an accumulative range down here. That is not bearish, fundamentally. That is, we've brought the price low, and now we're going to try to trade this range and get as much liquidity as we can down here and shake out as many weak hands as we possibly can down here before we take off and leave this range. I don't care what people say about MOAS. I don't care what people say about the ape movement. I don't care. This is a Wyckoff accumulation range, period. Like, it was already that before people took it up in January. Like, the breakout is a result of 10 months of accumulation. It's retrospective. It's not me trying to predict the future. I'm looking back at this and I'm saying, beyond a shadow of a doubt, this is a Wyckoff accumulation range. This is an accumulative range. Institutions were already bringing this down to accumulate it and take it back up. And it's established right here in the trend reversal signal. Like, it's already built out that way. So if you were back in this time period and you were saying there's no fundamental reason for this to come down this low. Well, yeah, there wasn't maybe at that time. Maybe there was a better reason then and now to be at like $2. I would say, yeah. There wasn't a fundamental reason to take it up to 72, that's for sure. But it doesn't matter. It was brought low to accumulate for a long period of time. They spend money to make money. They keep the price where they want to keep it. So I said earlier, I think if you were going to make an argument for a breakaway gap, this is probably the best gap we've ever had on AMC ever. But to me, I'm like, I don't personally, when I look at a Vanguard or a BlackRock and they can put 100 million shares into whatever stock they want, easy, like, I do not see how this is even an argument we're still having. Like, why is this an argument that we're still having? I'm sorry. If we thought a long time ago, and I unfortunately I was in the same boat, that this doesn't have a good fundamental argument to leave $14 or $12 or $9 or $6 or whatever. As it's going down, every time we hit these levels, it's the same argument every time. Somebody, including myself at different times in the past, has come on and said, I don't really think it needs to go any lower. I think it's at where it needs to be at. Market value for this is disconnected from the current value, yes, but that's normal in the market. When has this ever really been at its market value? Very, very few times in the last decade has this actually been at a value where it's truly represented fundamentally. This whole thing is a massive whip around, guys. This is a push away from maybe what in value could be to another push away from what maybe value could be. All of this stuff is just like massive swings around what would be considered fundamentally logical for this chart. So for us to have like a nosedive and then to sit here and to build out before we come back up again is very, very, very bullish. To have this low move before we come back out and we build a support again, back above 10, is very, very bullish. It is not, there's no disconnect in my mind. Like, this is just a range, period. If the operator wants to take it back down to the bottom, they're going to take it back down to the bottom, and there ain't no fundamentals that are going to matter when we get to that point, like at the bottom. Like, it's not going to make any difference. Whether you think or I think it's fundamentally viable makes zero difference. This is the established range. They already did it. This is retrospect at this point, 11 down to 250. This was built out with all these levels going down. They're trading it. And you know what? They're finding a heck of a lot of liquidity here too. We've traded sideways for 4 months and people bemoan that. They don't like that point. They get kind of aggravated and they're like, man, we've been trading sideways forever. Why? Because there's a lot of people that want to trade down here. The market is driven by liquidity. It's not just driven by fundamentals. Fundamentals are future thinking kind of things. Is it going to be in a better spot fundamentally by 2029 when all that debt comes due or whatever? That's the bigger question. If it's going to be in a better spot fundamentally, then guess what? We got 5 years to make a big move. We'll spend 1.5 to 2 years accumulating. We'll mark it up. We'll redistribute, whatever. By the time we get to 2029, they're going to have some great news. That's when we're going to be selling off because everybody thinks that's when it's going to FOMO. That's when they're going to be selling. The sell the news montage, the sell the news thing comes from institutional traders who manipulate you and me into selling our shares when the news is good, or into buying shares when the news is good so they can sell. They always do that. So by the time it gets to this point where like you're high up, it's not going to be like, it's going to be before positive news, you know what I mean? And then there's going to be positive news and then they're going to be selling it, you know what I mean? It's like, that's the way that I see it. So right now, like, could this be the motif? Yeah, it totally could be. But if we look at the big picture, make the arguments, like, do the due diligence, do what I'm doing and sit here for hours on end and look at the chart and determine the way this is setting up, and then come back and let's talk about how that fundamental plays in. I'm not making excuses for fundamentals. I think that fundamentally it should not be at $2, but I could have said the same thing back in January 2021. That's exactly what Roaring Kitty did, guys. He said it's undervalued. GME is way undervalued. Okay, was he right? Yes. Well, you're in another moment right now where you're given the same opportunity. I think it's undervalued. There's a disconnect between maybe what's fundamentally proper versus what's actually happening in the charting. No, I don't think we could know that answer, Reese. You can't know the mind of the operator until the operator is just finished. There's things that you can do in a range to determine whether they're going to go for liquidity or not. Um, One of the things here that has me curious is if we don't go, and I was thinking about this kind of two different ways. One is, what if we don't go high? What if we, instead of going up to 13 and hitting the top and making like an actual proper phase B top, what if instead we came low? Like, what if we make an ear and it only goes to like 7? Or what if we make an ear and it barely goes to 5? You know, what does that mean like long term for the chart? In some ways, it could mean that you're in for like less of a distribution cycle, because you could make the argument that if it goes like mildly high and doesn't go super high, the drive down may not be that extreme. You know, it could be proportionally basically like almost like a turnaround, right? Where you have kind of like that, I don't want to say 50-50 over and over and over again, but it's kind of like that, right? You get this kind of mentality of like, why would you move it this far? Why would you move it that far? You're trying to like propel the other way with those liquidity moves. And ultimately, like, it doesn't really make sense to drive the price one way or the other unless you're looking for the opposing move until you leave the range, right? Once you leave the range, it changes things. So if you did this jump here, the question is, can you do this jump and then potentially like hold the creek? I think the answer is yeah, maybe, you know. And then this could end up being like an LPS scenario where it doesn't actually do a low. Maybe it goes down here and then it hits an LPS and takes off. You know, the LPS is not suddenly out the window. It's definitely a possibility that it never comes back this low again. When we look at this big picture, though, it's like this is a wave bottom. And there's very few times in a wave bottom on AMC, it's not impossible, so don't hear me wrong, but there's very few times in a wave bottom on AMC where it doesn't at least attempt to go for the second low. It's the question of S-curve. I've said it a million times. It's the question of S-curve versus M-top. And this is almost always what AMC chooses. It almost always chooses the second dive for liquidity. It very, very, very seldom has chosen the S-curve. And the problem with the S-curve mentality right now is even if you thought this was going to build out into an S-curve, there's not really any argument to be made that it's going to go significantly high. Like, it's not really building out that way, you know? It doesn't make any sense. You'd have to have a whole nother, like this cross here would have to have another one high. And you basically, I mean, this is like, it's too much, right? You kind of get to this place where you're just spinning your tires, like waiting for something that you're not really sure if it's going to happen anyways. This would have to break out here. And this is what I guess maybe Reese and other folks may be thinking, is that this would have to essentially break out and then hold. And I don't know how I could do that. There's no way in my mind, because I'm looking at this like, where the heck is the middle here? There's nothing. There's no checks. I've just never seen AMC really do that. It would have to have some kind of massive slide. Even if it pushed here, it'd have to have some massive slide back to retest here before advancing here. I mean, that's a possibility, I guess. Anyways, this is like a conundrum of problems, right? You have to answer those questions. And part of me wonders if we're going to go the LPS route. If that were to happen, how would it maybe navigate the current days to come? Maybe it doesn't ever even push up. Maybe it just drops down. That, to me, would be more evidence that it's not going to come back. Is go ahead and come back down, get to the gap right now. Don't even push up. Or if you do push up, again, do like a little hooking distribution here and then drop down. That could be a very strong case for, oh, I think it's going to just take off and go and never come back. But from where it stands right now, it's really hard for me to make that argument that it just doesn't make sense. Like, and I'm not sitting here saying $2 lightly. I'm saying that when we look at the big picture again and you look at waveform schematics, it's not that complicated. Like the wave itself rarely provides like a perfect one-to-one. And usually there's a kind of a whip around it in the middle, and that's what we're seeing here. It's like the price is driving around these values in almost like a 1-2, 1-2, like 50. I say 50-50 a lot on this stream. It's not for fun. It's like literally I'm trying to define how the movement is traveling. And a lot of times, yeah, the reason that you press this far away is so that you can go this far down and do a proper 50-50, right? You're pressing this high, and now you're going exactly 1-2, a ratio of A to A here, 1-to-1, around this value. So it's essentially like it becomes a halfway point. And then the same thing applies here. You push away, and then you're doing this whip around that's essentially like a 1-to-1. Like there's the halfway point right there. There's the halfway point right there. You see that motif all throughout AMC. It's not the same as some stocks which just tend to break out early. They do this early jump over the creek, and then they just start advancing, which again, we talked about it. This is kind of what happened to SPY. It just sort of came up here and then did a little SOS and then just starts advancing. It doesn't ever have a massive pullback and whip around, and it's not following that motif. So like if I look at something like this and I do the same thing, which is exactly what I've been doing like all day on stream here, I feel like I'm starting to like sound like a broken record here a little bit. But if I do the exact same thing conceptually here, you would have to say like to some degree, right, that this has got to be following some kind of a whip around type target mentality, and at some point, yeah, it's going to come back up, and meet the need or the demand that AMC may have. But it's very possible for me. Like I look at this and I'm like, sure, if it wanted to get to $2, and you pumped it up to 13, like that's an adequate 1-to-1 kind of whip around. Like there's the middle right here. It is not that different. It's almost exactly the same as what we see right here. It's essentially exactly the same as what we see right here. Ignore it if you want to ignore it. That's fine. If you don't think that's possible, I just disagree. I think it's very possible. I think there's other possibilities, but for me, it's like the fact that this could pump up and then drive back through $5-6 and then drive back down isn't even a question in my mind. Like, yeah, could it do that? Yeah, it could totally do that. I mean, it's not even like a remote question in my mind. I'm like, simple. It's simple. You're just building out around this wave, and then you're creating, frankly, it's like almost better because then you're creating like a kind of a slingshot. And so the question is, if that doesn't happen, does it go up in a more moderate way? Does it do something like different? Sure, maybe. Then we have to ask other questions. But yeah, I mean, this is basically the way you would see it build out. The goal here would have been back in this area to get liquidity on these lows. They don't spend, if you look at the actual amount of time spent in these lows, it's very, very minimal. It's like such a small percentage of time in the scheme of this range. It's like multiple wick downs, right? And I would even argue it starts here. It's higher up. It starts closer to like $15 if you look back at 2020 now. That multiple wick downs, there's almost no actual time spent trading that bottom because it's strong. So you're getting bought up every time. And a similar thing would be looking at this and saying like, well, we're not going to spend, why would we go down there? We're not going to spend a lot of time there. No, we may not, and it's a little different. It's a little asynchronous because there's two zones. One's here, between 350 that we haven't really spent a lot of time. And the second one, I think you could just argue it's this whole bottom area beneath 290 down to 250. So it's not like
I'm saying you're going to go down there and trade for an exuberant amount of time. You're going to go down there and trade for like at most like a week or so. I mean, it's going to be fast paced. Very fast paced, you know? So if the goal is only to get to that target and to kind of ignore the rest of the moves, maybe in the midst of that, perhaps you could go all the way up and come all the way back down. I didn't talk about this secondary path. This is the one I was kind of avoiding, which is this yellow guy right here. It's hard to even see it on my chart. It's kind of like in the middle. It only goes up to like 8s. That to me is a different possibility, and it has to do with maybe a couple things, like where we talked about that 50-50 spin on the other one. That actually goes all the way down to the gap. So they went flat out to a new high, and then they went all the way back down to below the gap to hit that trend. And you'll notice that like where we are right now in relationship to that trend, if the goal was just to get down here before, let's just say before elections, and then just basically treat it the same way as they did elections in 2020, where it's kind of like that's the final bounce before the bottom. If you were to do that, you may even suggest that the goal might not be to get down to go up here, but to actually just come back down, in which case you don't really need to go that high. And this is kind of the more frustrating one that I didn't talk about in great detail. It's on my other chart. Basically, instead of breaking out, you go to that halfway point and then you distribute and you come down. And this is a method that it may not, at first glance, it may not look like it gives you the desired results, but it definitely could. So even though it doesn't come up higher, if the goal is just to kind of pump it so that you can get a huge 50-50 distribution and get to that gap fill, this is adequate, and it would take you back down. This is kind of my least favorite path because I think this would really suck. Because we've been talking about, you guys are like, yeah, it would. Well, we've been talking about this like for a while, and we've been talking about the that higher target area, and this is probably the most different path, because even this, yeah, it takes a little longer to get there, and that might frustrate some folks, and you're like, well, I don't know about that, you know. Fine, but it's not that different from what we've talked about before. If you've been watching this channel for a long time, you know that this is fairly similar. It's just kind of more like structured. You know, the structure is kind of widened out. You've got a little bit more anchor points that are a little different, but it's pretty similar. People that have followed me for a long time, in this particular example, that 1388 was a really early target. This isn't that different. So it's like, and then the $15 target, the $14 target, those are all the same. So like there's one scenario here that kind of sucks, and that's one where you push up, and AMC's moving right now, by the way. It's at 14 or 446, which is accurate. We thought it might come to 450 again. This is the scenario that kind of irks me the most. And I think what this would be, and I drew it on this a little differently than I drew it on my other one, because I think I had the, I put it like a little further over, like over here. It's basically the same level. The reason I did that on this one, ooh, that looks hard to read. The reason I did that on this one is because the other one out there is because of the ice. We call it the ice. It's this like rising parallel here. And I kind of looked at it like a couple different ways. And I was like, could you potentially use that to, flip it? And yeah, I think the answer is yes. So I looked at it as over here, there could be like a 50-50. If you put it in like the local time, yeah, it's pretty close. It's basically us coming above the ice level, that rising creek, doing a quick 50-50 up to $8. And you guys are like, well, this looks super similar to the the October breakout, doesn't it? And I'm like, yep. This is my worst nightmare, basically. I hate this. I hate this setup so much. It has to be spoken about though because it's a real deal setup. Like it's very, very similar to the other one. It's very, very similar. And the only real difference is that instead of breaking to the upside here, you break to the downside. It doesn't complete the move, kind of truncates it with a distribution off of like $7, which is a floor. And then it drops down and does a 50-50 around the wave. And this is how they use it. They instigate a sell-off. And I know what you guys are thinking is, well, could that give you, if that's, yeah, like you said, cat ears, could that give you enough oomph to get down? Remember, Vanguard has like 30 million shares. They're not going to need to sell a whole lot. Well, they'll probably need to sell quite a bit to get into FOMO. But remember, like other institutions have like a massive amount of shares here as well from about $5. So if they're all planning on selling around a similar level, they're going to potentially be selling all through this top so they can come back down. They're not going to get rid of everything. But I just want to point out that there's plenty of ammunition to do that kind of a move here. And if they manage to do it right, it's probably going to take you back down to basically where that gap is. And then notice it's like really similar to what we talked about in 2020. It came back down to that parallel level and just dips into that liquidity. This puts you in the right place for that election whip around. It's the same spot. I don't know if it means that on earnings it's going to dump or run, and that's what it comes down to. It's probably what's going to be like, oh, is it going to dump or run on earnings? Like, I don't know. But I think that this is a probable example of one setup that it's super unfortunate. I don't like it. But this is definitely a possibility that it doesn't actually make another high here. It saves some of that, which we've talked about before with those S-curves. They kind of build out and then they don't actually finish. Saves some of that, kind of displaces it, and then you end up with a very similar move that happened in November of 2020, and this essentially becomes like a new January setup. That's almost too one-to-one that I don't like it for that reason. But yeah, this is basically like a Santa rally followed by, a distribution here, and then it goes down into January, and you get to the spring. And this is where the spring would be because, again, like you've established this as a possibility for a trajectory. You've established this as a possibility that it comes back down here. I don't like the idea of making this super one-to-one. It seems a little skeevy to me. Like, why would you do that? It's a little too like on the nose. I don't know. I think that's a little bit creepy to think it would do something like this to be almost perfectly like the same, but I'm not going to put it outside the realm of possibility either, that it's that similar. I think it would be very strange. I really do. I don't really fully understand that. But yeah, then it could basically be all back the same as a one-to-one Jan-June kind of thing again. And yes, is the setup built to possibly give you that same result? Maybe. I mean, this hits a high in June, and it's a first high in January, second high in June. It's really more like February. It's very late January. This is a little different because this doesn't really terminate until August. It's a couple months off. So everything is like slightly later, potentially. But yeah, overall, could it be very similar in this regard? Sure. If your assumption is that it's going to do kind of the same thing, that's one way it could get there. So I guess what I'm trying to say is the only thing that really matters about this versus this, if you look at the setup, they look basically the same except the height of the cat ear. And one of them may go ahead and take part in an early run that then gets truncated while the other sets up low and then runs later. Do I think there's a one-size-fits-all answer for everything in the market? No, not necessarily. We talked about the setups, the similarities, the differences. We've spent hours on it today talking about it. I think what has solidified in my brain more than anything else in the last couple of days is this idea that it's very similar to the 2020 setup, but not necessarily in the way that people are thinking it is. I think that I would have to disagree with folks that think that this is like maybe the idea is they're imagining like this is all happening downward here, and so this is just the build out. But I don't know. I mean, if that's the case, it's going to look really different anyways. It's just going to take off, break out, and go. And I would be wrong. But on the whole, I don't see that as happening because I think they established the roof here. It's the same levels that we were dealing with back here. It looks like it should be the floor. And I don't see it as it's broken the floor, which is what happened in January. This was a breakout that went above the previous floor. It didn't do that here. It just sitting underneath it. So to me, it looks like we're still in this kind of August 2020 area, if you want to say we are here. That's just the way I look at it if I'm looking at it from a direct comparison. Waveform-wise, I can't help but think the same thing. Like this is waved up, come back down, and it hasn't yet tried to make the move back to establish this trend again. And it probably should. Worst case scenario is that somewhere in the middle of all this, and this is kind of the yellow setup here, is that somewhere in the middle of all this, it actually did do that. Maybe here in August, like, oh, it really already did that. You know, it already checked it. I'm not going to check it again. That's kind of worst case scenario in my mind. But I'm looking at it like it's a wave. It hasn't yet established that second move. It needs to establish the second move. We have a build out that's strong enough to go to 13. I think if it's going to go, it'll go there. And there's a possibility it gets truncated a little bit early, that it doesn't actually advance as far as maybe we think it's supposed to advance or whatever we want to call it. And then it ends up kind of dying out maybe earlier than expected. And this setup is a very difficult read because we're missing some pieces of information. We've got a lot. We just don't have everything. We've got a lot more than we did a month ago. I'll tell you that much. Which is part of the reason why I'm like, okay, I'm pretty sure this is, you know, setting up much the same way as it did before. But there's still not quite enough there to like make a definite determination, you know, about when and where exactly it hits the low. It's pretty decent. It's a decent estimation, but it's not exact. So, and then this line right here, frankly, I mean, it looks pretty much the same as the other. So there's that. But it hasn't actually made this move back up yet. So, yeah, I drew it a little wrong, I guess, on the first screenshot. It was a little off. It looked wider. It's still late 2025 going into 2026. And what I might be seeing is, you remember that February 2026 date? I kept getting that date across the market. It might be very much like the date of the top for a lot of stocks. And maybe AMC is just going to get there first. Maybe it's like the November of 2021 date. You know, maybe there was a way that if you had triangulated it, somebody out there was probably like, well, I'm getting November 2021 or whatever as this high. I think that might be the case here with this February date. I kept getting this February date, like, oh, February 2026 seems super important. It hits on like every chart I have. I don't know why. There seems to be a setup for February. But perhaps for AMC, which is done in the past, when the market was topping off in November, it was already done. You know, for how many months it was? 170 days, you know? Yeah, I mean, that's pretty darn close. It's 180 days. So maybe it's already done. Maybe it did its move. It hit $80. It's just chilling out here waiting for February. And maybe that's the reason why I kept getting February, and it ends up being that that's not really the right date for the high. It's just the date that most of the market gets there. And AMC has some weird acceleration that it does to get there, before then. Yeah, I don't know. I don't know the answer, but I know that this blue line, it's not the only thing. There's more to it than that, but it's one of the biggest things, and I think it's really important. And then the secondary part about this that got me kind of concerned is the lack of a push on this resistance. I still think that one of the main reasons that I thought what I thought is because this actually pushes up against the creek. It's not just a check of parallels or this or that. It's an advancement of this main trend down that's causing the stock to not really advance. And we haven't checked it yet. There's no check on this creek. So it's strange to me that I would find this particular intersection and have it be so favorable, like, oh, it's right there, and then not get it. And then all the same, it's like, well, just because you don't get it doesn't mean it's broken. But it's a very strange setup in that way. Like, to have a secondary top here, like almost like a cat ear, right? Like the second cat ear. Sometimes they come higher, sometimes they go lower. Typically, if it's accumulation, it should be almost like the appearance of a phase B top. That's what you would expect. Not typically like, it's not always the case though, because sometimes that first push is just really high and then the second one is like weaker. I wish there was like a one size fits all for it, but there just isn't. The one size fits all is that you get the paw and then you get the cat ear. And then I guess apparently sometimes that just comes back down and goes ahead and goes for a low. And sometimes this one goes up and I don't know, it gets a phase B top. And maybe it's be born out of necessity, for liquidity purposes, whether or not this happens or not. Whether this stays low and just doesn't bother, or it makes that wave back up. And maybe that's all there is to it. Is it necessary or is it not? So, yeah, there's definitely a part of me that's concerned about the possibility that even in the midst of all this, like we think that what's being built out here is a move to 13. I still think it's a fair assessment. I don't think it's wrong. I just think that that's just a target. It's definitely possible if this springs to go up there. But there may be a much bigger range being built. And maybe the idea is not to expel those shares right now. Maybe the idea is not to sell them off right now, but to just get enough to get down low and then treat this whole thing like a macro accumulation over a longer period of time and use that build out to take it up in like more of a squeeze motion. That seems reasonable to me as well too. So I guess we'll find out. Anyways, point being that after doing the analysis, I feel like it's pretty darn close to what we see here in terms of the setup. If it's going to be more or less 1-to-1, this should be coming up to like 13s before it goes down. If not, then I'm imagining there's a smaller push made, and it's just basically used to redistribute along 7 to 8s. So either way, it's, in my mind, I don't see it just dropping down at this point. I'm not saying it's not possible. It's just not the way I see it happening because of the setup. I think it's got to come up to either redistribute here or redistribute here. And those are, I mean, to be very straightforward, they're basically like perfect 50-50s. So it's like almost written in the stock to be a bit misleading because it's super simple to see how that could be a halfway point or a distribution point. So it's going to be a danger zone to some degree, We'll see. I think this is going to be one of the bigger indicators of that is this trend right here. If it breaks up and then it comes back crashing through here, it'll probably coincide with the top. That's what it looks like. So if it comes back down through that top, it's probably done. And it's going to head really low. And that's not a bad thing. It might be a bad thing short term for a lot of people, which tends to be how how these operators are anyways. But long term, it's not a bad thing. You know, long term, it's just a thing. It could be bad, it could be good. I would suggest it's probably more good than bad. You know, and it's a little bit weaker, but at the same time, it kind of checks more boxes to come down early and avoid the 13 for now until you're going to break out later. There's complications in that in terms of how you like view the range and what do you think should or shouldn't happen or what have you. You know, and I kick myself all the time for this because when we first came down, I think I talked about it more often, more frequently anyways, the concept of this guy right here and how a lot of times this is what you see, you know. It's not always that, there's not always that second push and then it comes low. And this has happened more than a couple times, you know. So when I look at that, I'm like, sure. It really just depends. I can't even give a perfect explanation, except that when it jumps this movement right here, this wave across, there's always kind of the question of, does it need to continue back to this top or not? I think that's probably all there is to it. And this move doesn't always happen. I think when there's a need for more selling pressure, that's when that move happens. When there's enough selling pressure as it is, then this just kind of slumps and it just leaves this behind. And we've seen both, so I know it sucks. I wonder if the better way to do this would be to look at this as if it's like, what if we looked at it like this is the S curve here? Or like because there's always a second breakout. I'm not drawing it all in detail. I'm just thinking about it. So usually this does this. And then you have like a little bit more detail to go off of maybe when you use that instead of just the yellow. The way I drew it the first time. I wonder if the best way to do this is definitely what we're doing right now. This is the last M shape. I've already talked about that. We talked about coming low to 430 to 440 a couple weeks ago. So basically, this is exactly what we're seeing right here. And we're kind of waiting to see if... So during this guy, it did another cat ear, which again, pretty normal. And during this guy, that second cat ear broke down again here. That's the current setup. I'm just simplifying it to like basic wave movements, so it's easier to understand. So I'm just dividing it into waves. I'm not doing anything, like, it may look complicated, but at the end of the day, like, we're just dividing it into the waves, like, every time. And so the question is this a spring action or not? If it's a spring action, then the resulting move will be to come back up and hit that high, and that's how you get to the next high, which makes sense. Actually, it makes perfect sense. I don't know. It's not complicated. It really just depends on this range here, whether or not this is a spring or not a spring. Really should have been here on the auto reaction phase B. The phase B bottom to me is still like 440s. That was the secondary level. I said 460s and then 440s. But I would put it, yeah, it'd have to be 440s. It's the second bottom. It's just a simple question of, is it going to spring or not? Which is the same thing we're asking right now. So in that whole analysis we did earlier, it was just several hours. I'm doing a comparison to 2020 to illustrate the similarities and the differences and why I think the setup is comparable and why they may be targeting these particular markers here at 13, 8, and then lower at 350, and then all the way down to 2 even. And that's bothersome to a lot of people because they don't want it to come down to 2, but it is sensible in a lot of ways for other reasons to think that that might happen. Yeah, gosh, it just kind of works, doesn't it? So the question mark is in this motion right here. Does that actually does that happen? I guess I should make it the same color. I know it's the same thing we have up there, but I'm drawing it separately so that I can kind of keep it simple, and it helps me to visualize it a little bit better, maybe. I mean, it doesn't matter how fast this goes. It's just whatever. It depends on how quick this moves, really. You could have it be very, very steep and just as successful. Like, this could be really steep and it would be fine. It still establish the same floors here. It makes no difference, is what I'm trying to say. That's what I don't know yet. I don't know that angle. That's what's tricky about this, is the lack of clarity of where that angle should be. I know where the center is on the 19th of the bigger cross, but I don't know where the creek should be. So what I did earlier, and I drew it on the other diagram, but what I did earlier is I drew the angle down. It's going to get messy. I drew the angle down here, and then I used that and created like a duplicate of it here to try to determine, like, if it went up, where would the 50% marker be? I did that as like an average because it was a roughly the same average on 2020. But the problem is that really the better way to do it is to have the 50% marker in mind on the move and do it from there. Yeah, it just kind of begs the question, like, does this really need to go up as high? Because it's taken so long that it's like I can't do it. If this is way up here, then presumably, like, this is the angle of descent, and it would take a really long time. This is what I was thinking originally, like, take a really long time to get to the bottom. It's too slow. But if you only came up to like $8 or $8.50 and that's the high, then the intersection changes really quickly to being like super low. You see that? I know it's kind of unfortunate, but it just is what it is. I don't want to be so like hard and fast that there's no flexibility. It looks off. It's on the daily, it looks off because it's like intraday or something. It's really bizarre that it doesn't go up that high. So this is the other alternate downward motion that's like purple. I need to make sure it's distinct because it's not the same. It's not the same marker. I drew this all kinds of wrong on this other diagram. Oh well. Yeah, so I mean, like in some ways, this is already following that trajectory down. That's fine. It should. It jumped over it on the 13th, as we were talking about earlier, and it didn't break out. It just kind of held, and now it's coasting down. I think that's important. I think that's part of this. That's why I think it may not drop. I had a couple of scenarios where it dropped early and then comes up, or it doesn't drop early and comes up. But it didn't necessarily have to. If it can find that spring bottom, it could just take off first. If it's going to come down later, there's not really like a reason to suspect it has to drop first, then go up. Unless you think it doesn't have enough oomph to get to the height. It's like a puzzle piece, but you don't know all the end results, so you have to kind of like know where to go. I mean, that could be it. When I say puzzle, I'm not saying it's like something that's, again, perfectly predetermined that can't have different outcomes. It's more just like, okay, does this fall in line with what we maybe would expect? Has to be that number. You can't get rid of that number, Booksy. You just can't. Has to be 42. Right there. Naturally, that's not going to match up because it's not actually on the... It just has to be that number. So this could potentially move... Ooh, and that 50% marker is like right on the button. Now we're just doing some live TA. If you guys are wondering if I have like a lot more to talk about with that, not really. Now I'm just kind of going through it again and seeing if I can make it better. That looks really clear to me because this is a push away from 597 here, which is like a center mark. It's an intersection of that wave, and then this is like a 50-50 spread around that. But again, do you have to go to the bottom? No. So it could be that it goes a little higher because you can like offset that value. So if the goal was to do this kind of a move on a response, and let's say the goal is not to go, just in theory, the goal is not to go up to 13, it's just to do this move. Yeah, if you like dip low, you may not come as high, and if you dip high, you may not come as low, and it just depends on your outlook of, are they shifting the value or are they just readjusting it? Whenever they go higher, I usually just kind of adjust it. If they go lower, I actually kind of tend to expand it a little bit more because it makes me think of a spring that's dropping below and then coming back above a certain value. But I would only do that here for the SOS. So it would be like if it dropped, for example, like let's say it dropped beneath here, it does go to 3 something, and it has like a really fast dip and comes back to the upside. I'd probably say that the SOS goes all the way up to whatever that same value is below, but do it above the top. And again, we'd have to debate where that top actually is, but something like that, right? And that's fine. That's a true principle. It happens all the time in the market. The spring kind of turns into like the top SOS. That distance down becomes like the distance above. I think it's a question of like liquidity returning back the shares and all that. But suffice to say, if it just has an LPS, and this was the intended result, let's say on a perfect setup here, that it was going to have this 50-50 push around 596. It's only going to get up to 872. If you stop high and you actually build out a little higher, you might get more bang for your buck. I know I said I didn't think this was going to happen. I know I said this. I said I thought maybe more like the 14th. I still think that's possible, but this could be one of those things where it's like another really rapid fire move. I definitely could see how this could rocket in a matter of like a couple days. And yeah, I know I said I didn't think it was going to move on Monday. I thought it was more likely it would delay with the market. But if the goal is not to go higher, but to just get up there, I think you could go get that mark. I think you could get your mark at like 950. It's really close. I think you could get that mark at 950 like really quick, like within a week. And I know it's a little backwards from what I said earlier. But it's all dependent on whether you actually want to advance or not. I think if you really don't want to advance and you really just want to come up here to sell some shares to drive the price back low, this might make more sense because if you come up high to let's say 950 instead of going all the way to 13, then you can 50-50 around this one, which has been used quite frequently lately. This is one that goes back, again, historically to that center mark. If you go back to 2020, it's been used a lot lately. It's being rejected upon right now, like rejected and moved away from it. That might be, yeah, that might be the established creek. This is where at 50-50, I mean, if we don't use any kind of weird creek lines, you probably argue that this is where it 50-50 back here, right? You can see it is like moves down to there, and then it does it again here. So and then where are they going? They're really only trying to get back to that marker. That marker it's not the same in our time frame. So back here it was that early support when it dropped down. That's where it went back to. So it's different. So which one is it? Maybe it's this thing. Oh, I bet it's this one. Yeah. So the goal is not to get maybe super low here. It's just to get back to here. It just fills the gap and goes slightly below it. I think that might be right. And then that would give you enough space. So instead of coming to like there, it goes to like 270. It's too close to earnings and elections, though. You know? It's like, it's got to be one or the other. I can't imagine it going. All right, whatever. All right, so then it's like, whatever, dude. Maybe this does go on the 7th, guys. Maybe the whole market just rips next Monday. I mean, like I had it on MPW for a long time that it would come up here on the 7th. And I kind of took it for granted that that was going to happen. But I'm kind of looking at this whole market situation. I'm just starting to think, what if it's not that different? AMC doesn't push low and go a week later. What if everything gets to where it needs to get to now and just starts ripping on Monday? And AMC rips, and then it makes an indecision moment here around 7 or 8. You have to do it before earnings, because I cannot imagine why earnings and then into elections you would be just dumping. I'm not trying to make it like 1-to-1 with what happened in November of last year. I think that's unwise, or November last election, but if the elections give it a pop, it might make sense to get down there right at November at the 8th, to be down here by the 8th, and then get that big pop reaction. In which case, I have no idea what the heck earnings does in the midst of all this. I mean, it would have to be some kind of cataclysmic drop, which just doesn't even make sense, but that's what it would look like if it drops. I'm trying to determine what this setup does as best I can. Yeah, I mean, maybe they do an early maybe they release earnings early, and maybe somebody thinks that they're going to release them like November 1st or something, like the week prior. I mean, that might be possible. Like we get some kind of quote unquote early whatever, or maybe there's an announced dilution or something. They are spending a lot of money. I could see there being a lot of catalysts, is what I'm trying to say, potential to that drop. So let's say on the 14th you hit like 980s and then you drop back down and you start chopping low. Frankly, maybe it's like faster than this. Maybe it dumps right through. There's no holding. Kind of suspected there would be, but maybe it's not as dramatic as that. Because, I mean, you could have it come really low, like do a massive retracement. That's one heck of a head fake. That would really screw over a lot of people. And maybe earnings is like the halfway point, you know? That would make more sense to a certain degree. Because you could have like a smaller distribution up top, and then there's some negative news like dilution or something. It doesn't have to be a big deal, or there's like an early press release. I'm just trying to figure out what would cause that. There has to be a reason. It's a clear enough move 50-50 here that works really well. But other than that, like I don't have a really great justification as to why it would drop. And I know this is an opposing theory, so you got to understand, like, it's a what-if kind of situation, but maybe. The other idea here is it doesn't drop, and instead, it's not that complex. It's basically the exact same, except that this builds out, and then on elections, you get the last push-up. That's kind of the main difference between these two setups. This is really very similar. And then you just make a bigger swing down. and the drop would be significantly larger if it goes up first. Significantly larger. And then, yeah, so both get a pop drop kind of period of volatility around earnings, and then, yeah, one's kind of like a reactive move, maybe the hook, and then the other is, it's really just a matter of how much selling pressure there is when you look at it. And then elections, both have the same motion, and then you have a similar push up into maybe like the 28th or something like that, 25th. Let's be a little slower. Pretty similar though in that regard. And then there's a massive kind of fallout here that would be really brutal, but it also works the same as a 50-50 swing. Both of them are totally possible. Like they're both there. They're both clean. This is more of a 50-50 around the top. Anyways. And then the question of downward isn't really a question at all. It's just more of like, where are you when this all finishes? Probably going to be in the same spot. Unless there's an LPS. And an LPS situation would just be like, this doesn't go that low. It only maybe goes down to the, maybe fills the gap, maybe it doesn't. And then it just sort of builds out here, higher up. And that's an LPS because it doesn't make a new low. Both are possible. So notice that it doesn't really matter which way you go with this. It makes no difference. The waveform is always the same. It's like you push up, you go down, you push back up, you're going to head back down. Like it's got to go back for liquidity and check it out. So it's never going to be that different in some regards. It's always going to be like some kind of a push up and then a push back down, and then you're just going to see what happens when it pushes back down. So if you're just kind of, again, taking this piece by piece, that's really the motion we're talking about. And then we're really just debating, not really debating anything else. We're just kind of saying like, well, how high does it go? There's targets high, there's targets kind of in the middle. It just depends on whether you get this like secondary bounce here. So the timing of it's in question. I feel like if we get an early rise, it may be more likely that we're going to see it early demise. Sorry for rhyming, but I'm also not sorry. I think it's fun. If you get an early rise here, there's a decent chance that you're going to get an early demise here, because if it takes longer, if the market takes off and we're chilling out, there's not really that much time to come all the way up and then back down again before earning. It's too close. Like you can't make that move up, down like that quickly. The double flush has to happen with enough time to hit these markers and fulfill its purpose, right? If you have an early run, there's plenty of time to sell off, get into position, sell off, get into position. But if the run is later and it's pushing really close, it almost doesn't make sense to have like a run up and then dump again right after. It would make more sense to run up and run up again. So in a lot of ways, I know it sounds a little weird, it's a little counterintuitive, but a delayed action may be in our best interest, because I think a delayed action would, in my mind, would probably indicate the timing is going to be more appropriate for the bigger run up, like the double run up. So I'm just putting that out there. There's no one size fits all for anything, but an early run seems to favor an early drop. And then the slightly later run, it's just a week off, but it's really important. About 1 week. Where's that little, I always forget where that thingy is. Hang on. It's like over here, right? Yeah, about 1 week. Seems to favor a bigger push, like a bigger pump, because again of the timing, it just doesn't make sense to wait last second and go up and down. That's just a matter of opinion, but that to me looks like a pretty good assertion or an estimation. So yeah, that's clean. Both are very clean. Both seem fairly systematic. And then the bigger question is, how do you get to the bottom? And I think, man, I think it's going to be like pretty close to the same as this purple line. It may even be like this creek right here that we're just now establishing, you know. We've got sort of an outer motion. We jumped this one and we're kind of sitting on it, but then there's another one that's being built out. It may very well be that that's the middle mark for the jump anyways. Yeah, maybe. Instead of it being like lower, it's like up here. That seems about right. I mean, it could be a little higher if it's sooner. Frankly, like this could go up all the way to like $10 or something if it goes early, which might actually make some sense too. So whatever, it's somewhere in this pocket. It's kind of a big range. I'd have to do like an actual, for timing wise, you can't go any sooner than tomorrow. So it's like, you'd have to be able to see like where is that at the highest if it went, for example, tomorrow, which is unlikely. That's like 1162. It'd have to just gap all the way up to the top. But then if you go further down this trajectory in time, eventually you get to earnings. It's like kind of too late. That window goes down to like here. That's the latest because they have to at least tap this line. So there's kind of a small, box right here of likelihood. And I don't think that the short term is very likely. I'm just putting it there because I need to put it there. I don't think it's going to go tomorrow. But I'm just saying like that, any of those would be adequate because it can get you to that check. So anytime it hits anywhere in there would be fine. And that's just an estimation based on what we have here. So, yeah. And then if you had another kind of midpoint here around the SOS, that works really well, doesn't it? With the rest of it. I mean, that's pretty clean, gotta admit. It looks right. So it's lower than the previous one. It's lower than some of the other estimations, but 1030 is like this level. When you look backwards, you got to kind of see like where is that at? It's really just checking this top right here and going down to this bottom. So it's still like an adequate zone. It's lower than the PNF. PNF target means, I mean, there's no doubt in my mind it's lower than that. PNF target has a good cause that could go all the way up to 16. I mean, there's plenty of time spent and built up here for a cause. So that's not really the question. Like, it's got enough ammunition. It doesn't mean always that it's going to hit that mark, though. And it also doesn't mean that you're going to get there in the time that you think. And if this ends up being like a bigger range, then there's a chance that that build out doesn't actually, yeah, there's a chance that build out doesn't, is like too short term. You know what I mean? Like that $13 might be adequate here for this range, but if it builds out as a larger, you know, build up, we don't expend that. We can just go back and look at that, and that could be a huge range build out for a later move that's actually much higher. So if it doesn't go too high, it just kind of stays within range, then it hasn't bigger range, then it hasn't broken out. It's just adding to that bigger range. Neither of these are breakouts. I'm just saying. It's a thought. I wonder also, like, there might be a chance that if we don't hit this blue line, that we do need to come check it later. Also, that's a possibility because if it's, I'm calling it a wave cross, it's really a trajectory. If it's really a wave trajectory, but it acts as both a resistance and a support at times. It's the directional input from the bulls is not met, then favor bigger move. Because if it's not met, I still can't ignore the fact that the bigger move actually has a much more appropriate check. Like it's a stronger check. It's a much more adequate check for an actual accumulation to come up here and hit 1343. It's not too high unless you count this as the top. This is more distributive in some ways than this. I know it sounds a little backwards, but it's a setup in the range. It just can't come way above 1390s. I still think that would be a little bit detrimental, even though, yeah, like I have a target that's higher. But that would be an adequate check. Maybe it does push this a little bit. I don't know. We'd have to look. But this would be an adequate check on that outer creek. So there's a lot of question marks here. I think is going to be a bit dicey. And it just sort of depends on what you think about what happens going into elections. So I think a later move that doesn't actually check this, that runs up into earnings and it kind of builds itself out along 8s and 9s, maybe a much greater move. It may be like a 50-50 swing up to 13s. If it doesn't check this level and it just kind of meanders and takes its time into earnings and builds out higher, that could be a very, very good potential. And then I think if it goes early and it hits this target at like 10s early, I think it's probably done. And you're more likely going to see it going to sell back down, get back to this lower level, and then bounce, and then come down low for a spring. And nothing really changed here. The spring's not exactly $2, as I mentioned before, but I said it was kind of an estimation anyways. But yeah, I would basically hit the lows down here and trade this bottom and probably leave at like 287 in January. And it would be very similar to the greater motif that we've seen for AMC. So yeah, this build out works pretty well with what we did earlier. And I'm not seeing any major inconsistencies. It's essentially like the same thing. I just drew it, and you guys can't see anything, but it's basically the same thing. I just drew it in different ways. This trend, I forgot. We want to keep this one, so let's bring that back. I want to see what that does. I think I already have it, because I think it's just a parallel to the other guy, but I'm going to keep it. I want to put it on this other one. It's a little cleaner. That was like a working chart for me. Yeah, it's essentially like this is a parallel to what we're seeing right here, which is another thing I noted was that there was a trend established back in April that we haven't actually hit yet. We might hit that before we take off, and that is being used also here as what I would call like that ice level. Presently, it's the same value. So yeah, it's if we go for the lower dip, I think that's probably where we're going to end up. crossing over here is at that marker, like right there. That's the same as that week of the 14th that we talked about, going into the next week. It's pretty tight. This is a really close to being close to being done setup. I'm not going to do other people's TA though. If you guys are looking for an alternative, the wave should be finished by 2026. That's been what my thought is for a long time. This is a humongous sine wave right here, and it measures out to February of 2026. I'm starting to think that maybe the whole market gets there around that time, but AMC may actually advance a little early and then drop, just like it did back here. I think it's very possible. So when I look at this big picture, everything looks pretty much the same as it's always looked. You've got a series of creeks. You're trying to establish a jump over them. You haven't done that yet. Once it's done that, it should just kind of take off. But it's going to take us some time, you know. And there needs to be a certain amount of patience on our part to sort of let the bottom set up. I think this is where people have a lot of disagreements about the bottom, is right here, whether it needs to come back lower again. There's not really a fundamental argument for it, though there might be a catalyst by the time we get there. Yeah, I don't see any issues with this except the question of liquidity. Like, does it need to come back down? So I'm not going to do what other people are doing with their TA. I'm not going to suggest this goes. I can't do it. I'm not suggesting this going to go to 20 and then hold this creek. And then continue. I don't see that in the chart. And I'm not going to change it because I just don't see it. Like, that's not my TA about it. If it breaks, it breaks. If he dies, he dies. No, I mean, like, if it jumps over, it jumps over. I'm not going to sit here and pretend like it's not happening. Oh, it's not happening. No, it's going to come back down. I mean, if it jumps over and it hits 20 or 30 bucks and then it holds this floor here, there's no reason to necessarily be worried. It could just continue to rise. And I think some other folks were on here earlier saying, well, I don't think what you have is right. I think it's going to do this or this, this. That's fine. Like, we should debate it, you know. But I think that the bottoms take time because they're building up, accumulating. And I think that the desire to come back down to 260 might be very, very great. And you've got some huge operators in here with a lot of vested interest in this. And I think that there's a strong chance that their averages are very, very low. Like, Vanguard had posted their 13F back here before we ran up. They could have done all their buying in, you know, during this whole time period, but really, like, a lot of their average is probably below 450. So I don't think there's any problem in assuming that they could take it up and then sell back down through and then buy in again. Like, if you can do it, why not, you know? So I've got to look at this and say that it looks pretty good to me. In terms of like a build out, it seems pretty straightforward. So which means I'm just not going to change my mind just to change my mind. I personally see this as like a pretty good opportunity to push this up, drive the price low for another dip towards the floor. And, you know, just to be straightforward about it, yeah, like there's possibility this is a breakaway, but there is a gap there, and we never went back to check it. Like, we never went back to check that breakout. Even in the midst of what I've got drawn here, there's like a really steep creek that we haven't tested, you know? Like I mean, it kind of looks right the way I drew it, but it's like really straightforward to me. The creeks are very, very low. They should be. It should be like here. I mean, that's how low it is. I mean, frankly, it looks like I did that on purpose, but I just put it where it should be. And I just don't think we've made this check. So it's just odd because the longer it takes, the more likely you are to go low. I think people forget that. That's been the way this has operated in a long time. You go sideways and then you come back to check a creek, you're going to go lower, not higher, you know? So if it takes longer to get there, that's not a good thing necessarily. Because a lot of times, like, yeah, you might go really high. It looks like it's going to break out, but it never checked this creek. Now you've got some massive distance you have to travel. And make no mistake, man, it would be nasty. But I totally think they could do it, you know? Yeah. There's nothing much to say about this week, okay? My estimation was we would dip low on Thursday, rebound, end up at 450 on Friday, period. I said it like a week or two ago. I said it on September 23rd or something like that is what I thought. We would probably start getting towards those lows on October 3rd and 4th, and then I estimated it would probably be the 3rd because if you're going to hit a low, you're not going to do it on Friday. If max pain's at 450, you're more likely going to do it on Thursday and then bounce. Does that mean that I'm right and it's never going to hit another low? No, but for now it's right. So we'll just take it one day at a time. If it changes, it changes. So I've been very like relaxed about this whole downward process lately because it's kind of every time it's made a step and it's taken a step back, it's basically done exactly what's expected. I'm pretty sure Pantano isn't saying $2 after 850. Nah, what? I don't care. What's ironic about that is he was calling for like 190 back here, and he was like, "There's no way we're gonna go anywhere until we hit 190 or something." And I was saying it's ironic because when you look at the big picture, you can be like right and wrong at the same time. It happens all the time on these charts because you look at these, you find downward targets, and you think, well, it's going to get there right away. And then it takes a really long path to get there. What I've learned over the last couple of years is that that's totally sensible because if you look at waves, in order to kind of revisit areas that have a high buy-in, you have to go up before you can come back down. What he said back here was like 190s, and I disagreed at the time. I said, I think it's going to be mid to low threes. And there was a lot of reasons for that, but it was mostly because of just the way that this was, trajectories were setting up with things like these, right? Like I had done measurements to kind of find those spaces, and I triangulated it, and I said, I don't think it's going to go to 190s right now. Well, what's strange is that when you look at this big picture, it's like, you don't need to. You can hit that marker and then go up and do a full trading range and then come back down. So basically exactly cookie cutter almost what happened in 2020, right? If you don't break out too soon and you instigate sell-offs and so on and so forth, you got enough shares to sell, and they do, then you can come back down later. So it's ironic because I think at the time I said I don't agree with him. I don't think it's going to go to 190. And I never say this to him personally because I don't talk to him personally anymore. But I said it to you guys because people were asking me about it. But then I was pretty quick to kind of like say down later and get to a low later. And I've been the probably labeled as like a shill and a bear at different times for thinking that this could be like this where it comes back down, right? Because this is what happens a lot on AMC. But he may have been not completely right. I don't know if it's going to hit 190, but he may have been like partially right where he's like looking at low targets. There may very well be an intention to get there, but in order to get there, you're taking it up to redistribute here, which clearly has happened, guys. I mean, I hate to be the bearer of bad news, But this motion right here is a massive sell-off action. It's like swapping out shares, right? Big volume up, big volume down. Doesn't have to be like bad overall. It's just, it is what it is. That's a distributive action in and of itself. Yeah, it marked up, but now it's like chilling out. We're really just asking a question in my mind. I'm just asking the question, where is it going to go next to distribute again? I think it's going to be a secondary distribution, push one, push two, and then come back down. And it's all to try to kind of get back down to the low liquidity. So it's ironic because as things change, a lot of times our tendency is to assume that these past targets that we have don't matter. They matter. When we came down, this is a long time ago. When we came down here, I got blasted. I was still on the Twitter at the time before it even was X. And I got blasted for saying that I thought this was going to come down to 350 and then maybe 255. Those targets existed, and it never did it until like this weird latent after hours price action over here. And even then I was like, I don't know. And then I got blasted again when I looked at that chart that was like a chart that was a combination chart. And I said, it kind of looks like it's positioning down for like a spring. And that was before this happened. That was before July right here with the second ear kind of pumping and dumping. Before then, when we were talking about this, I was like, there's a possibility this combo chart goes down to $1 the way it's setting up. It's like this big descending triangle looking thing. And you get blasted for stuff like that. And it's like, I don't know if those targets in the end were wrong. Something about those targets still resonated because then we ended up at 250. And I had called 255 way back here in like 2023. And at the time we were at like $4 to $5 kind of area. And so it was like, I would never have imagined in a million years that it would be after a reverse split, right? But who knows? Sometimes it's like you can't really know. That was after a reverse split. It's not actually the same. That's more like 25 cents or something, whatever you guys want to determine. Oh, you were way off because it should have been here or here. I don't care. The point is like sometimes you like it's neither here nor there now. I just think the point is like there's obviously some reason that number was significant back then, and for some odd reason it's the same numbers at the same values, and you're like, what happened? Why is the operator doing that? Maybe there's some kind of that they want to pull from dollar value. I don't know. I have no idea. Or just whatever they can accomplish, and they saw an opportunity to take it down to those same values again for liquidity purposes. I don't know. But I know that in the grand scheme of things, like if you find a target that's a solid target and you think it's really good, you should keep it because it could be that is indeed like the bear target, but that they're going to take it out sideways, do a secondary move, and then drop it down low, a bearish target, and then drop it down low here. So he may not be like 100% right, but he may have been right back then that maybe that wasn't the low, If he had just like stuck to his guns and said, I got this target 190 and I still think it might be relevant, then he'd be like the people's hero if this thing came back down because everyone would be like, yeah, you did say 190, and you've been saying it. Switching back and forth sometimes is fine if you've seen something change. I can't determine what other people should or shouldn't do with their TA, nor should I even attempt to do that. It's not my place. But I know on my part, like when there's a disconnect, sometimes it's not a matter of you're wrong. Sometimes it's a matter of the operator is doing something to get to that target. And a lot of times it's the opposite. You go up to go down, you go down to go up. And that's a very strange concept for a lot of people. Like I think right now we're going down to go up. But then I ultimately think we're doing that up to go back down. And then I ultimately think that we're going that down to go way back up. Because that's scaling. It's like small picture, down, then up. Medium picture, up, then down. Big picture, down, then up. you know? So I got nothing else to say about other people's TA. I'm not ragging on anybody. I promise you guys. And like, there's an irony to all that because I'm pretty sure like, yeah, maybe no one else is calling for 2 now, but they were before. And if let's try again, see if we can reestablish it. See if we can reconnect. It's just not connecting. Well, if it continues on like this for another couple minutes, I might have to just kill it. Yesterday, I kind of opened the door to more variety, and we didn't really have a lot of people on. Nobody was really asking for it. And then it seems like it's always like every other day or something. You get a lot of people about one thing or another. I think that I don't have as much time today to kind of field requests because I'm getting really hungry. My cats need water, and I need to go take a break and get to doing some other stuff. We've got a test this week, martial arts. So I got an advancement test, belt test, and it's hard, really hard. This is like the hardest level. The next 2 levels are like the hardest. Red to brown are the hardest because they have the most kicks numerically, and it's a lot for my body. So I've been training for that, and I've been training really as hard as I can, but it's kind of like a week of partial training, partial rest, because I need to be fresh when I go in. But I got to work on that today, and then I got some other animation stuff that I'm doing still. So I'm not going to be able to take a lot of requests today. Just kind of recap really quick. Yeah, I mean, yes, it's kind of what I drew. It came down and filled this lower gap here to the 550s. It's close to being in a breakout model itself. Very similarly, I had high targets going into October 7th. We'll see what happens. There's no guarantees in the market. Maybe the lower one is hit and I don't get this higher one, and that kind of sucks because I was hoping for the higher one, but excuse my French, but that's just the way it is. You know, I'm not going to complain if it only hits here. If it hits one of these, we've still got a really good potential for upside and so on and so forth. Okay. But October 7th was the date, and I can't change that. It's a historic thing if it works out because it changes so much stuff for us. It's not even funny. I wish I could express that more clearly to folks, but I think there's like a lack of interest in it because it's not everyone's cup of tea, and I get that. But I think that the idea of doing a 4-year predictive cycle and getting it right is pretty phenomenal. So we'll see what happens, right? If we get a takeoff right now, we should be heading up towards $8, but I'm not going to put it past it that it could just kind of stop short of that and only go up to like maybe 670s. That's again Monday. We'll see. So I would expect there to be maybe a breakout tomorrow with a retracement. So if tomorrow we get a push above, let's say we come back up to like 6 and then we came back down and we ended the day at like 560 or something. It's very possible that's it. Like that's the breakout of the creek and it just takes off Monday. I'll be waiting. I'm not going to say anything else about it. I'll say more tomorrow. Right now, it's just kind of a breakdown to that gap level. It looks like it's hit the support it needs to hit. I mean, frankly, like, again, if it's going to take off and do the big whip around, this is where it's done it from. It did the same thing back here in May on the 8th. Guys, it's so freaking similar. I can't describe to you how similar this is across the market right now. Like, the setup is just, it's so similar to what happened back in May. There's a lot of continuity here. I just don't know if it's going to pan out. I mean, I hope it does. I really do. I hope it pans out. But come on, you know, like this is basically what happened back in May as well. And the same thing for MPW on the 8th. It just took off. And within about a week, it was all the way at the top. So, you know, that being said, it's like, well, how do you know? You know, how do you know for sure? I don't know for sure, and it could be a little bit off. I could like 467 or something, and then come back down, and then goes later, and then that's that. The point is it's close, and it's really similar to that previous time frame, just like IWM, just like MPW, just like GME. It's kind of got a similar setup. Dang. All right. Guys, I'm going to have to kill the stream. I can't get the connection to stay put, so I'm going to type it, and then hopefully you can hear it. But, like, it's literally going off and on, off and on, off and on, off and on. I lost, like, half my viewers because of the stream cutting out. And I don't... Normally, if I reset it, it just works. But for here, like, it's not... It keeps, like, dipping completely out. So, and it's not maintaining a smooth connection at all. We've been really steady all day, I think, so it's not a bad thing. Yeah. Anyways, I think this is looking really good for tomorrow. I'm excited. We'll see you guys in the morning. I'm going to try to do a morning stream tomorrow. We'll recap then. For now, have a good day. Enjoy it. Enjoy the weather if you can. If you're out in the east, I'm praying for you guys out in Western Carolina, Tennessee. That's where a lot of my folks hail from, so... I feel you, man. There's bridges out, buildings got destroyed, entire counties got like wiped out. I mean, it's bad. But take it one day at a time. Be safe. Double boil the water if you can't get clean water. Double boil it. Don't get sick. Be smart. Don't try to cross water that you don't know how deep it is. If there's still flooding, just basic, general, common sense stuff. Spread that information around. My understanding is a lot of people have been able to find access to clean water. It's more about the power being out and the cell service being out, which means you probably aren't here listening anyways. If you are in that area and you can help them out with disaster relief, I would highly recommend you look into it. I'm kind of far away and I'm not going to be able to travel like immediately, so I can't help them out. But I'm trying to keep in touch with my family about it. Yeah. So you guys have a great day. I'll talk to you tomorrow.